Hey everybody, it is Thursday, November 3rd. We are looking at NQ on the algo. The main screen I use is a 24 tick Renko bar. I know it's got a bunch of signals and colors that most of you don't know what they mean. Don't worry too much about it. If there's something that deserves explaining, I will explain it. It's not something that you learn in a day. I've built it over almost a year and a half now. So it started like this. This is the trade and perform algo that the folks in the room I trade with developed. And so I took that and then changed some of the colors, added some of my own signals, and adjusted a few things just to my own liking to fit my style. But the entries are primarily the same on my system as they are here. The difference is that the added signals help me avoid fighting the flow, and they help me analyze what's going on and where I should be more active or aggressive and where I should be more passive. It's a lot of the things I've added to the system. If any of you are in the room already and using this one and feeling like you're missing out on some like special secret sauce that I've added to it, I want to make it clear that like with the things that I've added, it's primarily what the result is that I trade less, right? So if what you're looking for is more setups, I can help you find them. But what I've struggled with is not so much learning a new setup. You guys, it's just not that hard once you've learned a few of them. Like adding a new setup, it just takes practice. Eventually, the challenge is deciding when you can take setup A, when you can take setup B, right? It's like, what conditions do I want to like shift gears? That's where this game gets really tricky, because you can do really, I know multiple people in the room who use maybe one setup every day, all day. They don't get a ton of trades, but when they get trades, they usually do well, right? And as long as they don't trade off process, in other words, just trade because they think they know which direction the market's going, even though their process doesn't tell them to do anything, as long as they're not doing that, they're making money more often than not. So obviously some days it doesn't work out perfectly, right? But the point I'm trying to make is the key really isn't how many setups you have or how active you can be in the market, or did I catch this rotation or did I catch that, right? That shouldn't really be your focus. I mean, it definitely does influence my like psychology. If I miss a really obvious trade earlier and I had to like step away and then come back and make it up. Here, I'll show you how I'm doing today. It's been, I mean, okay, so here I'll show you. I don't really like sharing the P&L before I'm done trading, but I'll share it for educational purposes. So so I've had 12 trades and 50% of them were wins, which is actually low for me. Generally, if I've got a 50% win rate, I'm usually losing. So the fact that because we scalp, so the fact that I'm actually up, even though it's only a tiny little bit and it's basically flat, like on a net like under $100 up, it's in my opinion, it's, for me, like I actually feel okay about it, because I can, if anyone wants to see the actual trades that I did, I can share with you where they were. But like I said, it might be more interesting to get a live trade. But if we want to review what I did or didn't do, I can show you where I had an opportunity to re-enter on process. In other words, I got stopped out on the first trade, but my plan says that if it triggers immediately again, that I'm supposed to get back in, and I didn't do it, and the result was I missed a pretty massive move. And then in the morning, I had we were purposely trying to be um, more passive because we had reason to think that we were pretty far deep in the hole and that we didn't know where exactly the market would turn, but we thought it it was likely that one of the shorts eventually was going to fail. But I did have two decent short setups that I skipped on purpose. And like I said, at first I was frustrated with it because basically I had like a couple, like a long that worked and then a short that worked. And then I was like, okay, I'm skipping shorts because we're going down now. We could turn anytime. I skipped two shorts. I took a long and it failed. And then I had a chance to get back into that trade for a really high odds trade that turned out really well, and I didn't take it, right? So it's like, they're not all bad decisions. The stops were on process. Deciding to not shorten the hole was on process. All those things were as per the plan. It really was just one error, which was not re-entering when my plan said I should have. But because of the compounding effect of like psychology, when you make that one error, for me anyway, I immediately go back and I think about how the day's gone, and I'll react not depending on how many good decisions I've had, but I'll react sometimes based on like how I'm doing emotionally. And even though I was following my plan up to the point where I made that one mistake that put me red on the day, I was hyper focused on like fixing that problem rather than thinking like, hold on a second, you're not doing that badly. Like, being down a stop is not the end of the world. Just you're doing everything right. You just made one mistake. Like, people make mistakes, take a break, come back. Right. It took me a little while to get back to that. Like, I just had to talk to my coach and recenter, and then was able to come back and catch a trade over here. This one. And so that, now I didn't hold through all this, but had I held, I was allowed to, I just chose not to. Just got really choppy, so I'm like, you know what, I've got good gains, I'm just gonna drop my runners here. And got out of the trade on one of these. I forget which one I doubt it was this one, because that suggests it might go higher. So it must have been the second one, or maybe even like as it came up and then reversed. Somewhere up here above 10.813.75. I decided, you know what, that's good enough. I'm back in the green. I can kind of like reset the day. Let's just because had those runners come back, I would have been still red on the day. And so I think psychologically, even though it really shouldn't matter, like individual days and results, like it can influence like how I make decisions. Like, if even if I do something right but it doesn't turn out how I expected, it can sometimes influence me, which is definitely a leak and something I have to fix, but something I'm aware of and actively working on fixing. Now, we had pink bar star, and it was followed by another star, which is pretty aggressive. So they're pushing here, trying to save this voodoo range level. See how the voodoo range level is acting as resistance, even though they have the buy pressure coming up, right? So something I've been meaning to talk about is talking about buy programs and sell programs. I don't know if anyone's interested in this or not, but it's more theoretical. So the voodoo range levels are developed to identify spots that the mean reversion algos are likely to become active at, right? So when we get to see the dashed lines, when you get to them the first time, you can often get a read for whether or not the algorithms that kind of run the show, whether or not they are on a buy program or a sell program, or if they're just like neither, basically. I don't know exactly how it works, so it's hard to know, but there seems to be at least like 2 or 3 gears that these algos run on, and how they respond to these levels can give you a hint about how they are like what program they're running. Let's just say it that way. Because like I said, I really do think they're automated. It's just too precise to not be automated. But what the buy program looks like is this, where you get here. Let me. The short already set up, so I'm not really worried about missing anything, and I'm not going to buy it up here now that they rejected. So I can teach a little bit. So what the buy program looks like is okay. Where does it start? So the buy program starts. Realistically, it could start as early as here, but I don't necessarily catch on to it that early. Um, the trade I stopped out on, by the way, is right there, the green, and then the re-entries on the star that I didn't take, and you can see that was a massive trade. And it set up perfectly. It was a beautiful trap. Traded up under just a little bit, ran back up. It had already closed above the voodoo range level with the bar that's not pink. Everything about it worked. I mean, it was perfect. I took this trade. I executed it, and then when it stopped out, I didn't think about the fact that I can actually get back in here, and that this re-entry is actually a stronger trade than the initial green bar. And like I said, I could have taken this as well, but I was kind of like licking my wounds and didn't really notice it, that it was still valid, and so I missed this one. But then thankfully they gave me another opportunity, and I was able to get in for this scalp. So it wasn't huge, but it was enough to make back the paper cut from getting stopped out, right? And that's what's nice about having managed risk, is it doesn't take a lot to recover those stops. You just have to keep pounding the pavement. So anyway, the buy program. So the first hint of a buy program is when you go, if you've been dropping, right? Let's just say there's a sell program running, and like I know you don't know what that means, but I'll explain it in a minute. So if there's been a sell program, and then the shift is you start to bounce off of the voodoo range levels and close bars above it. See that? Now technically this should be looked at as at a higher time frame than 24 tick, because this is pretty tiny. So if you want to be more precise about it, you can either go to a higher time frame, or wait for a push that does not put in aggression at the highs. So you can see this is the first time that they tried to press back and recovered. See how they recovered this voodoo range level, right? But if you look closely, they got this bearish bar. They got that. See the yellow line that has dashes on it every time it interacts with the bar? That's where all the volume is in the bar. And so that's really the point that matters more than the close. The close is just 24 ticks from the last close. The yellow dash is where all the volume is. That's where all the action is. So that's the level I really care about. So when they push that yellow dash, or that yellow line, the VPOC line, and when they push it under the voodoo range level, I know that there's likely a sell program going on, because they've had momentum and they're pushing right through, and there was no one there to defend it. Because when they tested under it, they weren't able to put volume back above. So hopefully that makes sense. So that's sell program, right? The first sign of a buy program is, so it's when you get, after that happens, right? That would be sell program. Now they push underneath it, but they can't close a bearish bar that's not purple with a VPOC below the line, and they close a bullish bar that's not pink with a VPOC above the line. So sell program starts here, right? Or well, it's going on, but it's confirmed here, so you can sell these rips, right? Here they get under it with a purple bar, which doesn't really count. The purple and pink bars we just kind of ignore, because it's basically price moving because people are pulling their orders. This one closed above the star bar, but the VPOC was below, so that one doesn't give us any hints really. This is a pink bar, so that one doesn't give us any hints. And then this one closed below the bar with the VPOC above. So here nothing has changed. So sell program continues, so the star can be sold. All right, we come down into a support, we bounce. Now look what they do. They come up here, they put this VPOC on this white bar, which is bullish, like right on the line. then they put a pink bar, and then right here they put a bullish bar with the VPOC clearly above the voodoo range level, right? Like by this point, it's confirmed. Plus, we have broken a power bar or an apex. See how it like made a lower high? We've closed a bullish bar that's not pink, specifically above this lower high. So bullish bar that's not pink, above the voodoo range level, with the dash above the voodoo range level, the yellow line getting above the voodoo range level on a bullish bar that's not pink, and then a bullish close over the last lower high, right? That combination is what I need to see to know that that there's potentially a buy program like being activated, right? Because this is all sell program, and then this doesn't happen when you have sell programs. You don't get the break of the lower high and a close over a voodoo range level, especially on a higher time frame. And if you go a little higher, like a 32, you can see they still clearly closed it above, but before that they had not. None of these have a dash above it, and if they do, they close bearish or they close pink, but none of them could close a bar with the VPOC dash above the purple line until right here. This one's close, right? It's like within a tick, so that's kind of tricky, but this one for sure did, right? So once we get that confirmation that buy program is probably running, now what we want is the sign of aggression, right? So the signs of aggression in the trade and perform room are either a star going in the direction you want, or even better, it would be a green bar for bullish or an orange bar for bearish. It's really important that you know which program is running before you commit to taking a trade. If you don't identify that this is buy program coming, what you're going to do is you're going to continue to sell orange bars and sell yellow stars, and you're going to get crushed, right? Whereas back here, if you thought that this was buy program, you're buying at the very tops and getting crushed, right? Whereas the sell aggression is doing great, right? So usually understanding like what to do once you know what's going on is not that challenging. It's just a matter of being able to tell the difference between colors and learning which ones you want to respond to and which ones you want to ignore. What's much harder is determining whether or not you are in a market that has a buy program running or a sell program running, or if it's a market that's basically like the third gear that I said is basically where neither one of there is no bias, basically. It's just rotating and what I call negotiating a level. And so in that case, both of them actually work as long as you have decent risk reward. So like I said, once you've gotten that confirmation that the buy program is on, and like I said, if you need me to go over that again, I will, because I can show it to you somewhere else too, because sometimes it's easier to see once you've seen more examples of it. Then, like I said, what you're looking for is signs of aggression to the upside. So 1, 2, 3, 4. Whoops, I pointed to the wrong one there. That should have been to the green bar. 5. Okay, 6. Right? So 6 in a row that did not close below their low. Look. Well, okay, yeah. So so here's the first one. No close below the low, 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 right? If you didn't know that it's buy program, now you should, because they're not able to push underneath those aggressive buyers. And that's telling, right? When you get a close below, which happens here, this is not bearish yet. It's not a sell. what you need to do is, again, refer to your levels and say, okay, they tested below the low of this aggressive buyer. That's fine. Just like they did here, right? Tested below it. Now we see, well, how did they respond? How did the market respond when they pushed price down there? Well, they got a purple bar, which basically means buyers pulled their orders, but there was no aggressive buyer, no aggressive sellers. And then the very next bar, they came back with a volume anomaly, which is the pink and purple diamonds. And that's basically a signal that you only want to use if you're trading with the trend. So in this case, that diamond, since we're in a buy program and it's definitely a bullish rotation, we can buy purple diamonds. But you can see you do not want to sell them. Like, you don't want to sell this. That would really hurt, right? Because you're going in the wrong direction. You don't want to sell this. That'll hurt. The volume anomaly to the downside is actually a potential here. If you see them to the downside, they're still useful because you can mark where they are. So here's the sell one. What happens at the low there? Sellers are trapped and they become buyers. Okay. What about here? Are sellers trapped here? Nope. Right? So once we've gotten below it, we know that if they were continuing to be pressured by the buy program, they would respond when we test below it. And they did not. They closed an entire bar that was bearish with the VPOC below that bar with the volume anomaly. So as far as now it doesn't mean it can't print another up bar, but as far as I'm concerned, this voodoo range level now is resistance, and it's confirmed right there. You don't know for sure just because it touched it and banged off of it. If it was sell program, you would know for sure. But look what happens. See, this is buy program, and look what they do when they test the voodoo range level. They catch shorts selling it and then rip them to pieces, right? So you can't just say, oh, we tested the voodoo range level and rejected, so it's obviously short. No, it's not. I wish it was that easy. It's not. You need to know what happened before that. And see, they've already gotten the buyer up there. And then they put in this trap where it's a lower low, but a higher close. And so this is just your refuel. And that's actually the entry that's the second valid entry. This one, so this is your high odds entry, the trap. This is your second highest entry, and then this is your third highest entry. I took the third highest entry and skipped the first highest entry, and then missed this, but thankfully they gave me another chance. So you don't have to be perfect, but the real key, like all that execution stuff, just comes with practice. Like, you just need to learn and trust that it's going to work. And once you've done it enough, like, I'm still getting there, but once you've done it enough, you get more and more trusting, and you're more and more able to execute them correctly without hesitating. I definitely still need to work on that. But what I do see now pretty clearly, which honestly matters more, is should we be looking for longs or shorts? Or could both of them work? Right? Is this a situation where I should only be long or I should only be short? And like I said, when we were moving up here and we couldn't close a non-purple bar that's bearish underneath any of these entries. See, look, we couldn't close. So I said this one, we really couldn't close below it because it was a purple bar. And when we got below it, we immediately got a buy signal, right? So did we close below this? No. Where's the next buyer? It's here. That's the next buyer. So now we can say the same thing. Well, they came back and they got below them. Did they close a bearish bar below them? Yes. Okay, so is it sell program? Not yet. What do we need to see to get sell program? We need to get underneath the voodoo range level with a bear bar, right? That's not purple. Now, technically, we tested this one, so you could say, well, we did that right here. But in my experience, especially, depending on how strong momentum is, you can go back and forth inside of here for a long time and then resolve back up again. So all this means up here is that we're probably entering some sort of a consolidation period. And then if you watch the volume waves, these are cumulative volume waves, you'll probably see that they decrease, like the green one and then follow compared to the next green one, the second green one's going to be smaller. This first white one or gray compared to the next gray one, that next gray one should be smaller. If that doesn't happen, like for instance here, where you had small, medium, small, there's consolidation. Much bigger, right? So you get this one's actually bigger than these two. It actually got bigger, not just compared to the last one like this, but actually compared to the last two. This is a sign of range expansion. So when you get range expansion, there's a chance, that's your first opportunity usually, where the trend can really break down, change the program, where you're going to get your first true evidence that the buy program has ended and the sell program has been replaced, is now going to be getting under that big wave. So, and then we look at the voodoo range level, which is right here, 10,794.50. So therefore, because this wave started there, what I need to see is a sell bar underneath the low of that bar with the pink diamond. I need a sell bar that's not purple. We're not going to count purple and pink ones. Those are basically just like, there you can think like the price moved, but it's like the price action is not reliable because it occurred due to buyers and sellers pulling their orders. So the order flow was not convincing. There was no real aggressive order flow. Now here's a short, right? If we saw this and we're like, okay, that looks like it's pretty bearish, we don't want to, in my opinion, you don't want to immediately attack it, but you could. It's aggressive. If you missed this one, you can take this one. I wasn't paying attention. But that, and remember, I said we should wait until we got that bar closed below this last volume anomaly, and that happened here. And so that makes this short valid. Tell me if I'm going way too fast and you're totally lost, because I know it's a lot of information, but I'm recording this, so like if you're watching the recording, just like pause, rewind, play it again. Eventually it'll make sense. But like yeah, it's one of those things where you need some time. You need like screen time to really get a feel for what you're looking for. You're not gonna react in time. I mean, even sometimes I can catch these even when I'm chatting, but if I'm focused, I'll usually catch this. I wasn't looking at it. We were talking about this. So technically it could still be consolidation until we get a bear bar closed down here. Now the bear bar closed below that swing of the voodoo range level, 10.79, let's say 10.7990. That's not a short trigger. It's a signal that it's bearish. And that's a really important distinction. Just like over here, this bar closing above the voodoo range with the VPOC above the voodoo range and having it close not pink and not brown meant that the signal is buy program is probably on. It's not the time to buy if you're trading futures. The time to buy was down here. Right? So here, similarly, if we get the signal that it's bearish, which would be a bar down there that closes bearish, the sell would be back up here. Right? Now, technically, if we test underneath this, you'd think that you should probably buy it, but because of this huge volume wave, and because it went and interacted with the current high, I am not going to defend. That would be considered a defense, right? I'm not going to defend that level. Personally, that's not in my plan. Now, getting a purple background here that disappears immediately and then closing bullish here, especially if it's got a star or a green bar, is technically a scalp entry if there's reason to suspect that it's going to be a reversal, and that would be determined on the higher time frame, like finding location, right? But like I said, I don't like that we came all the way back down off this big wave. we really shouldn't have given up sorry, my Alexa's talking to me. Alexa, go home. We really shouldn't have gotten past the 61.8 here. You can see they tried to save it a couple times and failed. So this is actually, even if it trapped back here, that trap is a lot more dangerous in my opinion. It's not wrong, but it's, if you're gonna pick a trap, take it on the left side of this, right? This trap is so much better. And when I say trap, I mean it goes behind a apex, one of these little flags. It goes behind it and then immediately closes back into it. You only want to take buy traps like this when you have evidence that there's a buy program running. And you really only want to take sell traps, in my opinion, like this is a sell trap. See how you've got the apex before it? Oops. Hold on. So there's an apex right here. We got above it and immediately rejected. So even if this wasn't orange, you could technically take that just as a trap as long as you thought that the buy program was over. So it's okay to take traps when it's balanced. It's not okay to sell against a buy program or buy against a sell program. So, and like I said, the very first evidence that we might be in a balance situation, that buy program might be done, is actually, it's either, this is like very early evidence, right? And then the real evidence is when you trade under this with a VPOC on a bearish bar that's not purple. So once I've seen that, I know I'm not buying anymore, and I know that a sell trap is the best entry, highest odds, which was right there. And like I said, if we trap back in here, I will not be buying it. I definitely should have shorted that, but I did not. I just wasn't looking at it. Had I seen it, I would have immediately banged it in. Something we've been practicing in the room is really focusing on longs. Even on these big down days, the longs, the way this process works, the trading perform process, the way that this algo works, and the way that like order flow works, the long setups just work more often, almost twice as often. And the problem is if you try to go back and forth between long, short, long, short, long, short, you're going to make mistakes most likely because it takes a lot of skill to know when to switch like that. You need some rules, like knowing when a buy program is running. You need things like that. It doesn't have to be my rules. It can be whatever rules you want. Those are just my own rules. But you need rules to decide, can I be short here or is this long only? Or vice versa, right? And so the easy way to solve that problem, assuming you have a process that sets you up relatively often, like at least once a day, the easy way to solve that, and a lot of people in the room have done this, is they just go one-sided. And if you're going to pick just one side, pick the long side, because the long setups are so much cleaner. Like this kind of thing where you get a apex and then you test below and it comes right back. Yes, it happens on the short side. This is exactly the inverse, right? It does work that way. But sometimes you're going to get this where it goes above it. See how here's the apex? You go above it, they stop you out, and then the next one maybe works. This one didn't. There's a buy program running here, you don't want to sell that. But even when there's not a buy program running, if you take these short traps, they will not work as often as the long ones. The long ones will work like 65+% of the time, maybe 70% of the time. And if you can eliminate the ones that are aggressive, like during sell programs, it can work like 72 to 74% of the time. So like a lot, right? But the sell ones are not that high. They're more like 63 tops, right? If you don't know when to stop taking them, they probably work only 55% of the time. If you take them during buy programs, then maybe 50%, right? Which isn't good enough, in my opinion. So if you know how to filter them out, and you can tell when there's a buy program running, feel free. Then then you're probably a pretty good trader, and feel free to short, right? If that's confusing at all, then just forget about the shorts and learn to trust that you could take the longs. You could even take this one, right? You could take the long that develops right here with no rules, as long as you also took this one, right? If you took this trap and you took this trap, and if they set up here, it would have been this, right? If you take all those and you didn't take this, and you didn't take, is there another fail? No. If you didn't take the shorts, but you took all the longs, like just even in just this, right? You got 1, 2, 2 for 2, didn't set up, and then even if this one misses, it's 2 for 3, right? So I mean that's tiny little sample size, but I'm just saying that's pretty typical. Where 2 out of the 3 times it'll work, even if you don't know when you're supposed to take it. So, like I said, the easy way is just to focus on longs and only take the highest odds setups. If you're struggling with too many stops, or you're getting frustrated that you're not participating in the market when it's going down or whatever, if you've got these other issues and staying long only, long or out of the market, is just not good enough for you, right? Like if you need more, then before you start shorting, learn when the longs are less likely to work. If you can figure out when the longs are less likely to work, you should be able to apply that same logic, right? It might not be the same rules, but the same logic, and probably have a decent rules for short trading. That same setup. If you can't find a way, here, see it trapped? Oh, it didn't trap. It's actually a higher low. I'm definitely not touching it, but if you try but can't succeed in improving your long only win rate by adding rules, and like I said, yes, this takes some work in an Excel sheet and some journaling, and right, like you need to be doing that stuff. If you're not doing that, then like your growth potential is so much lower. If you journal your trades and your trade setups, and like I have here, I'll show you. It doesn't have to, I want to make clear that it doesn't have to look like this. Like how you do it. Oops, I opened the wrong program. How you do it and what it looks like doesn't honestly matter that much, but let me just show you an example of what it might look like. I don't know if this is still reconnected. I just lost my connection somehow. Opening up this thing made me lose the connection. Let me see. Am I connected? Live. It says it's a new session. Let me hold on real quick. Let me just make sure this is working, you guys. Just make sure this is working. Oh, good. Okay, it is. Cool. Wow. Usually when I lose internet, that stops the stream. So what you want it to look like, well, one way to organize this information. Where the hell did it go? Oh, it's downloading hold on. I got to download a new version of Evernote. They come up with what's it called? Updates very often. Here we go. Which is good. They fix bugs, you know? It's not a bad thing. All right, so what you want this to look like is, let me just find a, okay, so each one of your setups should have like a name, some rules, preferably with screenshots, and then like any variations that you're willing to take. And it should include like how you figure out where your stop is, how you figure out where your target is, right? That it doesn't need to be exactly like that, but that's the idea. And then when I have when I take the trades, I will put them here, and then I'll analyze them later. So it's like I know what the trade was called. I took the trade. I'm waiting for it to work. I'm nervous. I don't know if it's going to work or not, right? The best thing to do for me is to take a screenshot of it, open up Evernote, drop it in there, describe the trade, explain what my stop is, explain what my target is, and that way it's like in writing. It's almost like I've shared
my my um, choices with my coach already, right? Because I know I'm going to share it. And so because I've got that there, it makes me less likely to make like psychological mistakes because I get anxious, right? Because I know what I'm supposed to do and I've now documented what I've done. And so if I manage it incorrectly, I I'm not going to punish myself, but I'm going to have to go back and journal about it, right? Be like, okay, this was the plan, but I ended up doing this instead. And I'm not talking about whether or not it worked or not. I'm talking about like moving your stop or exiting early or double sizing or what else have I done? Yeah, adding to the trade as it starts to come back on you or as it starts to work. Taking extra profits and leaving only one runner rather than two, right? All of those little trade management decisions then get journaled as well. And that way, the original plan for the trade is there, but the results, not win or lose, but like when I execute the trade, that's all in my broker, right? Like I can pull up my trade executions and I can compare and be like, okay, it says I did this at 9 o'clock. Here's what I was supposed to do. What did I do? Okay, why? And now, does that make sense to do that all the time? If I made those same exact decisions all the time, would I be better off or worse off? And then I have to ask myself, should I change my plan or should I change my behavior? Usually, the right answer is change your behavior and fit to your behavior to your plan. But sometimes you'll do something and not only will it work, but you'll realize that it's actually like tactful, right? Like there's a reason for it, and in this situation, it might actually be a better decision. Then you can fit that into your plan and what I call variations, right? That's okay. Just realize that the more complex you get, the more um, errors you're going to have, because with all those rules, it's very easy to mix stuff up. Okay, so we got a sign of bearish aggression here, the orange bar coming right after the green bar. If you think the sell program is running, you can sell this. I personally don't see evidence of a sell program. I see evidence that the buy program has slowed down or stopped. I don't see evidence of a sell program until we can get below this. So I personally can't take this, but um, yeah, in again a variation that looks just like this is a short, and that's when you're in a downtrend and the sell program was on, not the buy program. Then this is good to go. It could still work, right? It's not that it's not a good decision to take the trade. It's just aggressive because it's almost like I need the trade to work to confirm that I should be taking that I should be being that aggressive. So usually in those situations, I will just skip it because stops hurt. I mean, I don't mind taking them every once in a while, but like if I can avoid a handful of stops, like on purpose, I'll try to do it. And this is one of those situations where I just, even though I do think it's bearish, as long as we take this out, if we can't, it might just be balanced. So that's a purple bar. That doesn't quite count. The beeping just tells me to watch for a trade because we're trading under an apex. Like it's primarily a mean reversion trade system, so what you'll see is a lot of going back and forth of buy programs on, sell programs on, no programs on. I can run either way, right? But the important thing is to know, don't momentum trade against momentum. So they got a purple bar underneath the voodoo range, but not a bearish bar. Now pink, right? So first thought might be, oh, that's kind of bullish. Well, it's not bearish, but it's no more bullish than this or this. It's no more bullish than that. It's just a test, right? It's just a test of the level. And it makes sense that they would be responding to it. What would be new information is if the mean reversion algos that sit at these levels, if they stop responding in one direction and only respond in the other direction, that's basically what the buy program and sell program is. It's where we get to this level and there are no sellers, there's only buyers. Right? If that's the case, then buy program's still on. So they did trap under this, right? And I said that it's technically a valid long, but it's not a long I'm going to take because of this. It's third wave up, third wave down, which means range expansion is likely. Well, range expansion would mean taking out the high and taking out the low. We did take out the low, so I could buy this with the intention of taking out the high, but to do that, I need evidence that the buy program's on, and unfortunately, trading underneath this is not what you usually see when the buy program's on. Remember, when the buy program's on, what you usually see is they get saved, right? Or they get tested and we get a bounce. So now this one, you did test with purple, right? And it did try to bounce. So if this exact setup is on the left side of the the big waves, if it's on the left side of the big waves, it's a buy every time. When it's on the right side of the big waves, it's dangerous. Doesn't mean it's not going to work, but what it probably means is that any bounce is going to run into resistance. Back where this guy, remember this came from that. So those are the trap buyers are up here. All these guys are trapped. And so we might make it back up there, but we'll probably find resistance there. And the problem is sometimes we're just gonna stop. And so those times I lose, let's say 12 to 15 points. And so when I'm right, I want there to be a chance that I at least go up 20 to 30 points. Here it was close, honestly, it's pretty close. It might be good enough risk reward, but usually on the right side of these big waves, it's just not good enough risk reward to run in. The chances that you're going to run into some trouble up there is high. Now, another trade that I just missed, I think. Yep, that made the orange good too. So right now, if we come back in here and print an orange bar or a star up here, that's a sell. Just like this one was definitely a sell, but I just missed it. This orange bar, like I said, it's really aggressive because of its location. See how far down it is? If you look at these channels, the shaded areas, you really want your buys to happen under the channel and your sells to happen on top of the channel, or at least in the middle. You don't really want to be selling at the bottom unless you're trading momentum, but we don't usually do that. So for the same reason as you wouldn't buy this, because the extension is just not expected, there's not a lot of risk reward, but like something that started down at the bottom is probably okay. This one is better, right? This one is even better because it's lower. Your position in the channel is better. So here as a sell, that's not well positioned. But if it comes back up and then rejects, it is. So let's see if we can get a rejection here. Now, it's not just a bearish bar. I need the algo to trigger because there's no apex here. We don't have a flag here, although we might once it starts. It might still show up. Hold on. Oh, we didn't trade above it. So this needs to be orange, and then I can. It's still not positioned very well.
Order filled.
Let's go ahead and take it just as a demonstration purposes. It's not perfect, but it's valid. So my stop goes above the orange bar. So it's got to be about 808. Okay. Give or take. And then what we have to believe is going to happen here is that this will hold and it will roll over. The problem with shorting is if it comes up here, trades just a little bit higher and rolls over, I have to actually take the trade a second time because of my location here on the channel is not very ideal. But the thing is we've got all these guys trapped and they tried to come back and they signaled short. Now, like I said, technically we have not invalidated this wave up. We have not confirmed that there's a sell program running, so it's aggressive. It's way more aggressive than this one. This one was a much better sell, but I missed it. So I'm taking a little bit of a chance here, but and especially to the short side, there's always with the shorts you always have to assume that even if it stops out, you're not necessarily wrong. But you know they still work sometimes. So it's I mean this one worked, right? So the chances that this works is above 50%, but probably not anything near 70%. Probably more like 55. If it travels back above the bar and then immediately rejects, the chances are probably up like 60%. No, because of the fact that it's aggressive, I will be taking, and I usually do anyway, I usually take profits relatively quickly. So I've got 8 contracts and I want to get rid of at least 3 or 4 of them at about 10 points. Because my stop in this case is 15 points. And so that way, if I can get rid of at least a third of my position at 10 points and make a little bit of a profit, it will, first of all, the amount that stops out will be smaller. Plus, the risk, what am I trying to say? The number, if your win rate's high enough, right, getting just runners to go 30, 40 points is all I really need. I can take a bunch of 10-point trades and be just fine because my win rate's high, right? Like I said, when I have a 50% win rate, I'm usually losing. I need a higher win rate than that because I'm taking profits quickly. Not all of them, but a good chunk of it. So 784 looks like what I need. Now notice that VPOC was right on the voodoo range level, which is unfortunate. I wanted it to be below it. It's right on it. So it's not bullish. It's just no information. We need another close lower that's not purple. If this next close is purple, I will probably exit the position because it was such an aggressive short, and see if I can get it on the way back. It needs to make another bearish bar to the downside. And like I said, it definitely could stop. It's too bad that it didn't fill me because it missed by just a couple points. So I'll still take a full stop if it comes all the way back on me here. But I don't move my stop. If it works, it works. If it doesn't, it doesn't. Like, we know if it doesn't, we have to be prepared to take it again. Assuming we haven't had any change in character. Now in this case, did it trap back in from there? It did. So it got below this by like a tick and then trap back in. That makes me not want to be a seller. And it probably means I'm going to get stopped, but I don't move my stop. When you get traps that appear to be working, you're probably fighting the algos, right? So it's not for sure dead until it stops me out. But this is what it usually looks like when it's going to stop. Is it gets just a little bit lower than the apex and then they reject. And like I said, the hint was that they couldn't get the VPOC below the voodoo range. So even though price is getting down there, all the big volume is at or above the voodoo range. So it's a sign that there's buyers supporting this level. Even though they got these guys trapped, they're still buying it. So that's just the way it goes. Sometimes you get aggressive and you run into a brick wall, right? And so we'll just have to see. Trade's not stopped yet. I'm not going to change my plan because really it's no new information. I knew that there was always a chance that it wasn't going to work. But what you really want to see is for this just to cascade lower. You don't really want to see them try to attack this a second time. The fact that the bar is pink means that sellers were actually pulling their orders as price rose, which again is really not what you want to see if you're short. You don't want to see your comrades pulling their orders out when you thought that they were your resistance. But not a reason to exit the trade. There's very few reasons just to like bail, unless I see what is a buy signal that I would actually take. I wouldn't take this because we're on the right side of the big volume waves. So I wouldn't have bought this, but it doesn't mean that someone won't. You know, it's still the sort of spot that people do buy, even though they probably won't get any further than this. Scalpers will take that and then they'll roll it over, and I'll have to take the short up here again. Unless they just rug pull it, then I'm saved. But holding a voodoo range level here is not bearish. It appears we're just kind of negotiating the level. We'll probably break this low and this high if they're just balancing here. They'll make sure to suck up all the stops. See, they broke this one and came back in. So it's, like I said before, it would have been an aggressive buy to buy this and not something I would usually do. I would rather go, if I'm going to be aggressive, I'll be aggressive with the most recent information, which was buy program probably over, right? But like I said, the problem is just because they stopped the buy program does not mean that sell program's turned on. So this like slow, choppy action suggests that we do not have a sell program running, and it's probably just negotiation or balance. So the only thing I can do here is if the trade is in profit, I can technically exit in profit early. I can't move my stop and like protect my partial stop. That's not a thing. Like, but if I'm profitable in the trade and I have reason to believe that like the situation has changed, I can exit early basically, but I need to then document why I made that adjustment, and then I need to go back and see if there's a pattern there that needs to be adjusted into my plan, or if this is a result of basically being anxious, right? So it's not okay to move your stop, but if you think you see something that you can document that makes you want to get out of the trade early even though it's profitable, you can do it, but you better be able to explain it. And that's why I think it's really helpful to work with a coach, because like when we go over my trades and I like, okay, well, I got short here and it looked like it was bearish and I should have waited for 10 points, but I got out at 8 and did you hold runners? No, I didn't think it was going to work, right? That's a problem, right? So let's see if I can get filled here. Oh, he's so close. Come on. Give me my
order canceled.
Okay, so they canceled the stop and they filled my limit order. So let's see. Now I could take it all here. I could take everything off and just say, hey, I don't see a sell program running. It looks like we're stalled. Once again, they have a bearish bar. You know what? I think I may go ahead and do that because they got a bearish bar without putting the VPOC below the voodoo range again. Let me just see if we can get a little bit of sell order flow here as a result. It does not look like we can. It's sketchy AF. There's just, the weird part is you'd think that you'd run into sellers down here. I'm trying to be patient as I can, but you'd think you'd run into sellers down here, and there's just no sell order flow. It's a purple bar that they're trying to print. It's not printed yet, but there's these purple bars at the bottom, pink and purple bars, suggest that no one's trading down here, and that's not what we want to see if we expect rollover.
Order
I'm gonna
filled.
exit. Let me take a quick break just so I can document this, and then I'll show you guys what it looks like, and I'm gonna run to the restroom. So I'm out of the trade. We took, let's see. So we added a little chunk to the P&L and basically doubled it, and so now I'm 60-40. All right, so that's all right. And I'm out of the trade. So just give me 2 minutes, guys. I will be right back. I'll leave you some tunes, take a quick break, and I'll show you how I document the trade, because I think that's probably useful information. If anybody has any other questions about what's going on, let me know, and I'll be right back.
Beats.
All right, let's turn this off. And okay. So does anyone have any questions? If anyone's been watching, has questions before I go into documentation, or if no one cares about that, I don't have to. But does anyone want to see how I document like those when I make trade decisions? Is anyone interested in that? Okay. I think it's I don't know. I think it's something that a lot of people don't do, and I thought I was wasting my time when my coach told me to do it at first, because I was like, I know what a trade setup looks like. I don't need to, write down every single time I take a trade, and what's the point? But the truth is that it really has helped me figure out what I'm doing wrong before it costs me a lot of money. So if you ever make mistakes repeatedly and it costs you money, you can or makes you miss out, you can like speed up the learning by documenting why you're doing what you're doing. And then plus I think it helps quite a bit with tilt, because like for instance getting out of that trade, now look, that trade did not stop out, right? And I could have held it rather than getting out for 10 points. I could have held it and it did not stop out, and they could just drop it, right? But I chose not to hold it. And so regardless of what the results are going to be, we don't really want to focus on that because the results of individual trades really don't matter. But it might clue you in to start looking into like, what could I have seen something there that gave me a hint that it was a good opportunity or not such a good opportunity. In other words, should I have even been in the trade, given that I will not hold below in this situation? So if again, what I want to show here, I'll just do it. So we'll pull up, oops, we're going to pull up this. Okay, so first I start with the boring stuff, right? I need to know like the actual order book. Let's see, no, not order book, recent orders. And I don't want canceled orders. I want completed orders only. And I want update time. No, something's not right. Hold on. Oh yeah, no, that is right. It was a short. Yeah. So okay. So my most recent. Yep. All right. So what we're gonna write over here, and like I said, I'm not too worried about the actual results. I don't really have a trade that can set up, but I want to be able to keep watching though. So, oh, I don't. It keeps showing me that get rid of these. It's showing my canceled orders, and it's confusing. So let me fix that. rejected and canceled orders out. There we go. Okay, that looks better. It's like there's so many orders. Okay, so opening position. Let's see. All right, so I've got this in Pacific time, but my order book is in Pacific time, but my algo is in Central time because that's Simon's time. So when I'm talking to my coach, and I want to be like, I took a trade at 12:42 or whatever, like it'll be correct on here, but it'll be wrong on my order book. So so what I do, I document it central so that when I share this with my coach, he doesn't have to do the math. So my order book says entered the trade at 10:42:55. It was the time. So that's 12:42:55. The date. Usually I haven't put any in for today. All right. And so now we got short, and the short was short 8 at, not the order number, where is it? Average fill price is what I really care about. Short 8, where was that? At 10,793. Okay, so short 8 at 10,793. And then we, let's see, core off by 3 at 10,784.25, and then bail out by 5 at 10,789. So that's like the technicals, right? Those are the things that when my coach says like, what the hell did you do? Right? I have all that information here, right? And so then what I want to do is I'm going to, whatever time frame I was trading on, which is the 24, we're going to take a picture of the setup as I saw it, which was 12, what did I say? 40, my memory's so bad. 12:42:55. 42:55, right there. So I shorted, that can't be right. Oh, wait a minute. Didn't we short this? Thought we shorted this. Hold on. Could have sworn that the short was earlier than that. Filled, sell 8, 10:42:55. I could have sworn we sold the orange bar. We did. We sold this. Yeah. Okay. So I must have just been a minute late or whatever. But I got filled right where it's supposed to be. It's just funny that the timing doesn't seem right. So I can do this. Entry short. Okay, and then before it gets any more gross, because like I said, we got out of it. And that I'm particularly doing this when I don't necessarily do it for every single trade, but I do it particularly when I make an adjustment on the fly, right? Just to make very clear. You can do it with every one, and that's great, right? And I think you should. But if you want to know honestly, do I document every single trade? I should, but I don't, right? The ones I make sure I document are the ones where I had a process to go into the trade and I changed my mind and made an adjustment during the trade setup. And so we're gonna put this here. So that's the trade entry itself, right? We've got the picture. Wow, that's way too far away. Hold on. I can't even see anything. You guys probably can't see anything either. I forget that not everybody's looking at this at a 55 on a 55-inch TV. Okay, so all right, so that's what the entry looked like, right? Or what the
the market look like? I mean, it goes a little bit further. You see the results here. So now I describe what the trade entry parameters were. So the trade entry parameters are traded below. So remember, we had trapped buyers up here, right? So these two entries are the same. This one and this one, same exact parameters. Traded below trap buyers. And we could say aggressive. Trapped aggressive buyers. What do aggressive buyers look like? They have diamonds or stars. Okay, so trapped. They're trapped because we're trading below them, right? And up here, he was trapped because we were trading below him. And then we also have, there's a second aspect to this trade, and that is sell volume developed below VPOC of wave to high. So what that means, again, it's my own lingo because we have setups in the room that everyone sort of is familiar with, and so it's important to explain how you came up with the entry. So let me show you what that means. And again, I'm already out of the trade early, which is why I've got to document it. So we talked about traded below trapped aggressive buyers, right? Does anyone not understand or see the trapped aggressive buyers? Entries here, trapped aggressive buyers have white stars or white diamonds, right? Those are the trapped aggressive buyers. So the more challenging part of this trade is the more like complex is that see these waves down here? On the wave to the high, so this is the high, right? It doesn't have to be the high of the day, but the high of like the like, I don't even know how to describe this, but like the peak, right? Of where, like a relative peak. So a relative high, if we draw the volume profile for just the wave to the high, what we'll find is the VPOC, that pink line here, is where most of the volume was during that wave up. Whoops, I lost that's okay. During the wave up. So what we can do is we can mark, just to get an extension of where all that volume was. So let's just put a line right there. You could technically like mark it off, but whatever. Let's just do that and simplify things. Okay, and we'll take that off. So that line is where all of the volume, see the volume anomaly? The diamonds, volume anomalies. So as they're coming up, this was like neutral volume, and then there's something unusual going on in here in the footprint. I'm not going to go into everything, doesn't matter, right? But there's a lot of volume going off here, and then we traded below it we closed a bearish bar that wasn't purple below that line. And like I said, as soon as that happens, and if you watch the stream again, I explain this in real time. As soon as that happens, we know now that these guys are trapped at the highs, and we know that there's a chance that if they can aggressively push to the downside, that move can get extended. Usually that extension goes to at least the base of the wave, to the high, right? Or the rotation. Not an Elliott wave. These are Weiss waves, if you're curious. So the Weiss wave to the high, all the volume was up here. There is a spike, like squeeze to the top, where sellers just pulled their orders. That's why it's pink. Then sellers aggressively pressed down, put volume below all the volume to the upside. When they tried to go back and rotate back up into that zone, guess what? Those buyers became sellers. Thus the orange bar, right? That's your primary sell. And that's a great sell. I just missed it because I was chatting about other things. it then came lower, went down to the target, which is the bottom of the wave, right? And it set up again. It did the exact same thing. It had trap buyers, aggressive buyers, stars or diamonds to the upside. It traded below it. It came back up and rejected with a sign of volume shift, which is the orange bar. So that is the trade. It's aggressive because it's the second rotation. The first one up here, like if you see that, you have to take it, in my opinion. If I see it, like I'm talking to myself here. If I see this, I have to take it and I need to hold it. Because most of the time you're at least going to come down to here. Right? I can take my 10 points, but the rest should be held at least until this low is cleared. Right? And then if you can hold runners longer, great. You can see that this orange one is technically valid too, but it's not positioned very well. It's below the channel, right? It's the whole bar is below these shaded lines, which is a channel that most of the volume should be expected to go off inside there, and we're below that. So what usually happens when you get a signal below is you trade behind it, and then you get ready for the trap back in, which happens right there. And that was our entry. So it's like I said, I described it here in my own lingo, which is trade below the trapped aggressive of buyers, sell volume developed below the VPOC of the wave to the high, and then second rotation down, second volume shift down. Bar. The other important aspect of this that I didn't mention is that it's got a little yellow box on it, right? That little yellow box indicates that this dashed line here is where most of it's the developing volume point of control, right? Depending on what you do there, I occasionally the algo will occasionally give me a signal of a sign that we're rejecting it or accepting above it. The yellow is a sign that we're rejecting the developing volume point of control. So we can also say developing point of control reject, and we'll say yellow square, right? So that was the parameters that I saw to get into the trade. And see, this is why you have to do this, because then when it does this, it's just like you can beat yourself up, but not learn from the experience of like, because what I would do is I'd be like, okay, I want to get out of that because it looks like it's going to fail, and then it works, and it's like, oh my, you're so horrible at this, you're never going to learn, right? You just beat yourself up because you missed, I don't know, another 20 points or whatever. When the truth is that like the only thing that'll keep me from holding that trade is continuing to believe that it's too aggressive to hold. And so if I want to know, well, should I be holding those with runners, or should I be getting out of them at 10 points? The only way to know is to dig in to what I saw, what was the situation, and then the next step is, why did I do what I did, right? So, oh, wait, the first step is the plan. So the plan was, along with some logic, right? So I said the aggro cell requires an aggro exit, right? Aggro entry, aggressive exit. That was the plan. That's what I said. That I don't think this is going to go all that far, and that I probably will have to exit aggressively. I did not plan on exiting as aggressively as I did, though, right? But that was my plan, was get in, get at least 10 points, see if you can extend a little further. Any sign of aggression after that, it could be done, right? Because we've already gotten to the bottom of that third wave, that big wave to the high. We'd already reached the primary target of this initial sell, and this was really just a secondary sell. So my thinking was take profits quickly, aggressively exit if you get an opportunity, right? What I actually did was we saw
we saw, let's see, we got in here, right? So we saw them get under the voodoo range level. Let's see, management. So closed bearish bar with VPOC at the VR level, right? That was the first piece of evidence that I was like, I don't like that, right? That yellow bar is right on this voodoo range level. In other words, they struggled to close a bearish bar with the yellow line under the VPOC, under the voodoo range. Had they gotten this volume shifted just a little bit lower, I would have held it. But when I saw this bar, and then that was followed up by a pink bar, I was like, yeah, I don't think I want to have anything to do with this, right? And then my actual exit, so I got filled on the first one at 84.25. So that was just a planned sell, just to take profit. And like I said, it was early. 84, no, that can't be right. That'd be impressive. 10.7, 84.25. Wow. That's impressive. How did that happen? 10.51. 12.51. Yeah. So I got filled right here. Wow. I didn't realize just how good that was of a fill. And that was just targeting, right? That was honestly random. Wow. So my first fill was right there at 25. Right? I saw that. I didn't like it, and I said it live. I was like, I don't like how we can't close a bearish bar without getting the VPOC below the voodoo range level. This might fail, but I'm going to hold it, right? I need to get my 10 points. That's the rule. So I got my 10 points here, like literally at the bottom. It then shot back up with a sign of aggression, right, to the upside. And I said, you know what? Let's just exit this. And so my last exit was at 89, right? And remember, my entry was at 93. So I bailed on the last 5 contracts early at 89 as this came back right there, right? And so I believe, I don't remember if it was, see, we had the star down indicating further aggression. We had this star down, so that, and then like I said, I got filled, and then exited in here, and then it bounced off the voodoo range level and rejected. So, results oriented wise, did I make the right decision? I did not make the best decision for this individual trade, right? So I need to. But the question is if I did this 100 times with this exact same scenario, am I right to be nervous about that when they can't get the VPOC under the voodoo range level? That's really the question. So close bearish hit initial target. Let's see, what was it? I got my core off at 84. So yeah, not quite 10 points, but almost. And then they printed star, diamond, up, green bar. And then I bailed during next rotation down, right? Because I got out down here. Because I said I needed to get out for a profit at that point. I couldn't move my stop to save half a R or whatever. The only thing I could do is exit the trade early, which I did. So, like I said, the result of this one was market continued lower. And so the question then becomes, where else has this happened? Oh, that's right. I forgot something. One thing that had me nervous here was the pace. They changed the pace and chopped, right? That's important. So right here, pace slowed, range tightened, right? That usually is not in the short's favor. Usually when pace slows
and range tightens, it's not usually that bearish. But what I need to remember is that it doesn't mean that this individual trade is not going to work. It means that after this trade, I may not want to take the next short, right? That's a possibility. So, like I said, if I was results oriented, I'd say even though the result of the trade was a win, it was not managed optimally. But what I now need to do is go find similar situations like this where we're trading. Oh, I forgot to mention we're trading at the bottom of the. Did I mention that? Second rotation down, second volume shift down, second rotation down. Let's see. Traded to bottom of wave to high. Second rotation down. Second, yeah. Well, I can just say second volume shift down. Okay. Okay. So there we go. So that's how I will document those trade adjustments, right? Those trade management decisions. And then the key is not just to you don't want to just beat yourself up about it because you could have gotten 30 points and you only got 10. That's not the point, right? The point is document it. See how often you make that exact same decision. And then see if it repeatedly results in the opposite of what you're instinctually doing. Because really what I'm doing here is I'm reading the market, trying to decide what the market's going to do and making decisions on trade management based on that, rather than saying the algo says it's a short and I can put my stop up here and I should be able to get 15 to 20 points more often than not. I should just leave it alone regardless of what happens, right? That's what the process says. It says buy into the process. It usually works. Just let it do its thing. Right? But what my brain tends to do is it says, okay, there's the entry. I've got it. I've got that down. I know when to enter a trade. Look, I got my first profit target. Sweet. Oh, this is never going to work because of this, this, and this. Get out. And then it works. And so that's just where I'm at right now. Just to be totally candid, is that the mistakes, the errors that I'm making are rarely getting in when I didn't have a plan, or getting in because I missed a trade and now I'm tilting. I mean, it happens, but that's not where most of my errors are. Most of my errors are not, and it's not like, I didn't know where to put my stop or whatever, right? It's my most common error is do everything right, but be a little bit more aggressive than usual, and then mismanage the trade because I'm basically afraid that I'm going to get a stop. Right? Because that's really what it is if I can reprogram to, rather than thinking, is this going to be successful or is this going to stop? Instead, I just have to ask myself, over time, over a string of trades, if I took this every single time exactly how I'm supposed to, would I be ahead or behind? Right? Net, where would I be if I did it right every single time? And in my experience, when I do it right over and over again, the results are really good. The problem is if the real problem with doing what I did is getting aggressive in and then bailing out with 10 points. Sometimes that's going to fail to work and you're going to take a 15-point loss. The times when it goes 30 points, I'm actually still only getting 10, right? So if the max favorable excursion doing what I just did is 10 points, the question is should I be taking that aggressive trade at all? Or should I just be skipping this? And I think the answer is, if you're going to bail on it, even though you're profitable for 10 points, I'm pretty sure that it doesn't work often enough to 10 points that it's actually better to skip the trade if you're not going to hold it. I'm pretty sure. Right. Yeah, exactly. Second guessing and anxiety. And it's right. Oh yeah, the winning trade, like adding to winning trades is really tough too. And that's another whole nother story, right? Of a whole nother challenge is like when something my coach has told me over and over again, it says, You know that feeling where you want to get out of a trade so that you can save it from being stopped out? Yeah, that's probably where you should be adding. And I'm like, oh my god, no! It's like it's just so uncomfortable, but he's right. Like that is usually the right thing to do. Assuming you have a process that when you do it right, it pays you more often than it doesn't. Like I know the process works. I know that, thankfully, right? That's the first step. That took me months and months and months and months of practicing. And eventually I got to the point where it's like, if I backtest this, every time I backtest it, the results are great. Right? And if sometimes when I do like a review, and I replay, like on a Saturday or whatever, I'll like replay like the hardest day and just like, or maybe go to a random day that I don't remember and just focus on like not making money, but just do what the program says and see what happens. Like massively huge winning days, right? like ridiculous results where like I just like stumble onto 100-point trades because I was in the right place at the right time and wasn't worried about whether or not it was going to work or not, right? But then when it's live and the money's on the line and I'm thinking about, I start thinking about the results, right? And I get focused on, I don't think this one's going to work. Like instinctually, something's like not smelling right. And I'll either skip the trades that I really need to take, like I did earlier, like this one. Like I said, I got this. It stopped out, and the process says get the fuck back in, and I didn't do it. And like 4 people in the room are like, I got the star entry, and I'm like, no, why didn't I take it? And I knew I should have. I just hesitated, right? I was just anxious about it. I was like, do I really? All I could think about is, what's going to happen if I take 2 stops in a row? Like psychologically, where am I going to be? Like, it's like I had sort of a so-so morning. Do I really want to take? And by the time you're thinking about that stuff, you missed it, right? Any opportunity is gone. So when it comes to those kind of like uncomfortable entries that you know from experience do work out more often than they don't, and sometimes for huge gains like that, the solution is just run the program. But God, that's so much harder than it sounds. Yep. Same. Yeah, it is. It's all in your head. My coach says where you need to work, where I need to work, is to buy in to the actual process. Like keep studying it until there's no longer an anxiety about will this one work or won't it work, because not only do I like intellectually know that the numbers will work out, but that I instinctually know that I just trust that it's okay if I take a stop, because if I just keep doing what I'm doing, I'll end up fine, right? Once you can actually, like, I can say that and I can see it when I go and do the reviews. I see it every day, right? But then when it actually comes down to the actual in the moment hitting the button or not clicking the button, my brain just takes over and is like, it's not going to work. It's, you know, and that is a killer. But and then the other advice he had is, well, document every time you do that, and then see how much you're missing, right? Like here, I got out, let's say, because one of them was like 89 and one of them was like 84. Sorry about the fighter jets. I live next to an Air Force Base. So let's say that's the average that I got, right? 86.50. I could have gotten like 64.50, let's say. Like that's another 22 points. And if you think about it this way, that means I could have taken twice the stops that I like and still been ahead as long as I get that 20 points. Since my stop was only 15 points, if I would have gotten it wrong, not gotten it wrong, I shouldn't even word it like that. If the market just doesn't go the way that I wanted it to go that time, I'd only lose 15. Yet the times that it works, I'm actually making more than that. So it's like being anxious there actually doesn't make sense, because the only thing I should be anxious about is missing that trade, because when it does work, it's if that's consistent. Obviously, that's just one example, but if that setup consistently results in 20 points or more, then literally the only mistake you can make is not taking it or exiting the trade early. Like there are no other mistakes you can make, because if you kept doing it the way you're supposed to do it, you would come out ahead. And so, like I said, I know it intellectually, but in the moment, I develop this sense that I know what's going to happen. It's almost like a psychological disorder. It's anxiety is all it is. You're right, but it's like I'm so much better at explaining what to do and not as good yet in executing it. And it just goes to show that, like, you can have all the tools in the world, and you can have, like, in the room that I trade in, you know, we probably have like maybe like 25 active traders, and like the ones who just put their head down and just do the thing, right? They just like run the program, consistently catch those trades and trade them correctly. And it's like, it's so good for me to see that consistency. And then when I have good days where I'm doing it too, it's like I can like participate in that, and that's great. But it's really helpful when I'm struggling to see, like, right away I get kind of pissed. It's just like, fuck, why is everyone else doing it and I can't? But then eventually I'm like, wait, hold on a second. Like, seeing that everybody else caught it shouldn't be a bad thing. It means my process is working. Like, I have a process that actually can pay me. Like, that's not a bad thing. I just need to do it, right? Yep, exactly. It is. It's the worst feeling. Like, I honestly have gotten better at dealing with stops. I don't mind taking like the 4-point ES stop or the 15-point NQ stop. It doesn't really bug me that much. At least I don't think it does. Not usually. But man, missing the 50-point ES moves or the 100-point NQ moves when I had a setup or I was in, like you said, and I just dumped it. Because it's like, I don't want to give back, right? Or whatever. Like, whatever the psychological thing that you couldn't handle is, I feel like a doofus, you know? It's just like, wow, like someone freaking handed me the keys to a Lamborghini and I took it around the block and I said, well, cool car. And then someone else comes and like realizes they can keep the car, you know? Like, oh, they were giving it to you, man. You just drove it around the block, right? Like, that's what you feel like. It's, yeah. And then right, it is. And you know what else? Not only is missing the move because of anxiety worse than losing, I've actually found missing the move because of anxiety leads to losing. Because I tilt, right? I get the realization that like let's say that this buy was an on-process entry, and maybe it was. But if it was and I miss this, what are the chances that I'm now going to chase and like make excuses for why I can get long? Like, tilt, you know? Like that's just human psychology. And we have to remember that if you have a process that's working, it most likely takes advantage of that tendency to like FOMO and put your stop in the wrong place and all this. Like, it's a zero-sum game. Like if you have a process that's working, someone needs to make mistakes for your process to work. And I think it's important to remember that like mistakes will be made. There will be opportunities. The question is are you going to be the one making the mistakes and paying someone else? Or are you going to be the one who can stay like on process and take the money from someone else tilting, you know? And it doesn't have to be personal, right? But it's the real key to this game is just don't tilt away your wins. If you just don't tilt away your wins and you have a process for collecting money when people tilt, like, you've got a good system, right? But can you run it? That's the question. Yeah, right. It is. Meditation. Yeah. Good call. Yeah, I don't know. Maybe cocaine would help. That's a good question. I that might be worth some investigation. I don't know. Seems to work for some. Okay, so I did have a valid entry here, but it would have been, I would have had to been planning it, because basically just like the way, remember this one, wave to the high, put the volume here, and then we got underneath it. So here, wave to the low of this rotation, put the volume at the low, creating a double distribution. See that? And so when you can get an aggressive buyer down here and then you get volume up, now if they set up with a green bar or a star down here, I could technically take a long. The question though becomes, do you want to long this chart? You know, like bigger picture, is this a location that I want to be looking long? And that's debatable, whether or not there's going to be an opportunity to the long side. Because if you look big picture, what I'm trying to get at is that we're basically in the middle of this. It's like an inside day, right? Like not inside. It's not inside at all. We actually gapped lower, right? But from the beginning rotation, we've been contracting, right? So the hardest trades are going to be in here. The easy trades are going to be at the edges, up here. Well, here, let me get rid of this. Up here. What the hell? I guess I have to drop it and put it. They're going to be up here or down here. Those are going to be our better entries. So yeah, it's balanced. So you really don't need to trade in the middle. And with when I use these voodoo range levels, what you'll see is there's usually one of two types of behavior around them. Either they use it as support and resistance, or they orbit it like this, usually expanding in range. So if they are orbiting, the next step is probably take out this low and take out this high, which is weird. It could be the other option. It could be the other direction. It could be take out this high and then take out that low. But that's usually what they do. If they're not going to do that, what they usually do is bounce off of it and then go, or come down, retest it from below, and then fall. It's usually one of the two. They do react to it. The question is how are they behaving around it? And that can be kind of tricky to figure out. Oh, hold on. Let me just answer this question. Hold on. All right. So yeah, there's not a whole lot to do inside of here now that we've expanded, but if you want it along, what you really want, you want it down here. You don't want a long up here. You'd want a long down here. Either a trap underneath this that comes back up, like a trap meaning like they trade underneath it but can't close underneath it, or maybe like one bar underneath it. Yeah, see if there's anything. Now this is an aggressive buyer indicated by the star, and he was right at the top of this rotation. So that's not what you want to see if you're bullish. Yep. I'm telling you, those are good setups. Those are really good setups. Yeah, the bar POCs are super, super useful. I'm telling you, super useful. Like a ton of setups can be found just by observing how they're developing volume compared to price. There are so many patterns, it's not even funny. And a lot of our signals incorporate the behavior of the volume, the VPOC and the bar. A ton of, like, if you want to know like what's the number one signal, or like not signal but like function, I guess, that I am using to create signals and triggers, it's where is that VPOC in the bar. Yeah. No, it's true. It's true. Are you in the room, Sim? Or are you just trading a similar style? Because that's what we're doing all day long. So we don't have it set. You technically, yes, but I don't because there's a lot of discretion where you wouldn't want it to trade automatically. It's not sophisticated enough to like not trade when you know it shouldn't work. If that, oh, okay, cool. Yeah, no, that's that. If you're doing like the what'd you say, the traps, the trap trades in balance, like that's what this algo does the best. Is trap trade and scalp in balance days. It can do other things too, but it does that the best. But the problem is the algo is set up to read order flow and structure. It's not set up to try to necessarily like filter out which signals are valid and which ones aren't. Like, so I have to use my brain to decide, like, am I bullish here? Well, if I am, then I'm looking for white stars. If I'm bearish here, well, then I'm looking for yellow stars. But if you just have it sell every time a signal comes up, it's going to churn a ton. Like, would it do okay? Like, it depends. It would do fine on a balance day. It would get eaten up pretty good on a trend day. But we know when it's trending not to fight the trend. So could you build it and add some simple, momentum based filters and make it automated? You could. But I definitely prefer to have discretion, because I think a lot of that stuff is difficult to. It's difficult to be like, to get the computer to be like as good at discerning where when I want to be long or short. I think there's a lot of levels, like looking at multiple time frames, understanding time of day, right? Like so many, not like trading when there's a Fed speaker, not trading during economic news. Like there'd be so many pitfalls you'd have to work around. Not saying it's impossible, but no, I agree. No, I know that you're right. And that is why we use the algo, is to get rid. I agree, totally agree that the brain part is what we're trying to get rid of. It's so true. The less you can think, or what am I trying to say? The less thinking you can do, the better. If you have a system that doesn't require a lot of thinking, that is your best case scenario, no question. Yeah. Intuition is really tough. I've been trading since 2016, so give or take 6 years, and it's funny because there are some situations where I am sure intuitively that I know what's going on, and then the algo will tell me something different, and I'm trying to learn to just trust the algo, but almost always when my intuition and the algo don't match, the algo is almost always right. So it's like, a lot of time for me, it's hard to discern what is intuition and what is bias. Because a lot of times they kind of feel the same. Something my coach told me, which I tried to remember and think about this a lot, is that your intuition true intuition will not be an emotional response. It'll just be like, oh, that's probably a setup, right? But you don't have the emotional, like, oh my God, I gotta get in. There's no FOMO, there's no fear, there's not an emotion tied to it. You just look at the chart and you'll immediately just kind of be like, yeah, it looks pretty like bearish to me, right? Like, but I don't have a sense of like, oh my God, I gotta get in this. This is the best spot to short. Like that, when it's emotional like that, it's probably bias. When there's no emotion and it's just intuitively, I don't know why, but I'm pretty sure this is bearish, but I don't know what to do about it. That's intuition, and it's probably accurate. Yep, I agree. And the key really is just, from what I see, like I said, trading with 20 plus people, kind of learning the same process. The ones who do the best are the ones who very incrementally, slowly work on their issues and mitigate them one at a time. Like in the same way that like how you get better at like a performance sport, right? You literally just like practice and keep working on what you need to work on. And if you can just even think about it this way, you might not be the best trader in the world tomorrow, right? Just because you like did some practice. But I think it's very reasonable to think that if you practice something over and over and over again, you may be able to improve how you execute like one trade, right? If I taught you, here's this trade, here's what you have to do, and you went and practiced it for a while, came back, and then I'm like, oh no, this is what you have to change, try this, and you went back and practiced it for a while, you will get better at that one trade, right? Like you will eventually get more consistent with that one trade. And what's crazy is when you do that, psychologically, you realize like, wow, I actually, you can see the growth, and you see that like, I worked on it and I figured it out, and now it's not so hard anymore. And approaching the next problem becomes easier because you've had success like fixing those issues. And so the real key is just fix one thing. Like pick something to work on and just hammer it until you fix it. And it has to be something like objective, something where you can actually measure and be like, look, I actually am doing that better, you know? But if you pick that one thing and then, I mean, of course you're going to make other mistakes, right? But if like for a month, let's say, I mean, if you're trading every day, maybe for like 2 weeks, all you measure on, you don't care what your P&L is, I mean, obviously you still have to have like limits and stuff, right? Like you should have like max loss and all that. But if you just measure your performance based on, did I hold, let's say like it's holding trades, right? Did I hold my trades to target? And that's all you're going to measure on, and you know it. Day one, you'll probably suck at it. Day two, you might do a little bit better. Day three, you might really suck at it, right? Day four, maybe a little bit better. Day five, really good. Day six, pretty good. Day seven, really good. It's like all of a sudden you've learned that I can improve. And you look back and you're like, wow, over these last 7 days, look at my worst performance and look at my best performance, and my average is actually improving. I'm holding trades for 20 points and not 7. Like that realization has helped me buy into the process of improving as a trader, and it real happens, but not as much. Let's see. So high or low. This may be a star when it closes. Hold on. Let's see. Yeah. So if you're bullish, that is a high or low with a star, and it's got an arrow. But it's not trending up, right? It's balanced. So I really don't love. You'd have to think that we're going to break this high and go higher to buy this. I want to get on the edges, but just so you know, if it is bullish, if the buy program's on, that's a buy signal. It's just I'm suspicious of whether or not it is or not. But yeah, exactly. Make a list, pick one thing, and just be like, I'm gonna get to all of them. And you know what might help is figure out which one's costing you the most money, and just work on that. Whatever it is that's like, or maybe like leading to tilt that then costs you more money, right? Like whatever it is that if you made that one single change, if you could just get better at X, and then just find a way to not do whatever you're doing and just accept the results of not doing that. Like, because again, like it's usually mental, right? So if it's holding trades, like what I need to do, for instance, or the next step that I need to do is I need to accept that if I hold trades to target, I will see runners get stopped out more often. How is that going to feel? Well, let's journal about it. How did I feel? I got 20 points. I gave back 15. Here's how I feel. And then it happens again, and then it happens again. And eventually you get used to that suffering. And you also, in the meantime, get some positive feedback when it works and you get 100 points, right? So at first you're going to suck at it, and then you're going to start realizing how you feel. And then the last step is you actually see that it's a good adjustment, and then it just becomes trading, right? Just like taking an entry when you're supposed to enter, or just like not trading during the Fed, for instance, is something that I needed to learn, right? It sounds like it's easy. You just push your mouse out of the way or close your broker. But I hate to say it, that like I can be a bit of a crack addict sometimes. And when the algo is like flying all over the place and I'm seeing buy signals and sell signals, it's really tempting just to grab one and not even just like that's definitely an entry. I need to take it when I'm not. But the truth is that when the Fed's talking, like Powell's talking or whatever, or like there's a economic release or something like that, the chances that he just says something else that completely shifts the market is high. So while the signal might be valid at the moment, the conditions are not optimal to be trading with order flow, because you're just responding to the algos that are responding to him. So all you see is algos bought this. Well, that's not going to matter if the next words out of his mouth are the exact opposite. Like all those signals, they will matter only until he says something bad. So I would rather, if I'm going to pick a time to trade, I would rather trade during a time when a bunch of people are participating and they're not all reacting to the same information. I want a mixture. I want the chance that I'm not the one making the mistake much higher. And unfortunately, if it's all about whether or not you're responding to this one piece of information, correct or incorrect, the only edge is if you're the fastest one to respond to that information, and I don't have that edge. So, Yep. Nerves, yeah. I call it hesitation. It comes according to my coach, and I believe him. It's something everyone pretty much goes through, especially when you're building a process. And it's a symptom of not buying into the individual setups or not having enough evidence that a setup is valid. Like not having a clear, it's one of the reasons we have the algo, because I can't argue that that's a star. It's like, I don't have to see if you're trading from this, like I can, you can still see the star, but it doesn't look like a star, right? It's like it's numbers and relative length and stuff like that. Like with the star, it's like the algo tells me there's aggression there. I don't have to think about that. I already know the conditions are met. It's just a question of, do I want to belong here? So it's right, and not trusting. But even with the algo, I will still be skeptical of myself too. I will absolutely still also do that. And I've even gotten to the point where I guess it's just tilt, where like I'm so skeptical that instead of just following the process, I spend the trading day trying to build a new setup because I'm not confident enough with the setups I already have, which is like a huge toolbox full, right? I don't need any more setups. I've got plenty of signals. I've got plenty of ways to get me into the market. But for some reason, because I don't trust myself, right, I would rather spend my time analyzing where the very best place to get long was and how I could have seen other signals that I don't already have to get me in, right? But that's not an efficient use of your time if you've already got a system that's capable of being right 70% of the time, And like most of my days, now like I said, sometimes I lose and sometimes I tilt. But if I take out all of those tilty days that I'm not following the process and just look at the days where I just take the trades like I'm supposed to, even if I don't exit them correctly, I can still usually achieve a 60+% win rate. So I know the system works, but I don't, my trading doesn't, I'm not behaving like I know, right? I'm not executing like someone who knows that their system works. And it comes back to, like you said, just being anxious and anticipating that that this is going to be one of the 30% of times where it fails, like knowing even if you're right, like 70% of the time, like I know that at least 30% of the time it's going to not work. And I get so wrapped up in thinking I might be wrong. This might not be the right setup. This maybe, I don't know. I just come up with all sorts of excuses and then miss out all the times that it works and give back every time it doesn't. So it's, reinventing the wheel. Exactly. And isn't that funny how like psychologically it feels really good? But it's such a waste of time. Right. Yep. It is. It's totally a paradox. Every individual trade absolutely is random. There's a 50-50 chance that it's going to work or not. But what we do have a little bit of control, right? Like past performance does not equal future performance. And that is real. Like that is the truth, right? You can, like, just because you have a back test does not mean that the next trade entry will work. If I roll a dice and and it's fair, the chances that I get a 1 every time, like it's still the same, it's still 1 in 6. Like it doesn't matter how many 1s I've gotten in a row. Or how long it's been since I've rolled a 1. It's always 1 in 6. Doesn't mean that if I roll 5 times that the 6th time's going to be a hit. No, and that gambler's fallacy really fucks with people's heads because in the moment you're doing everything right, making all the right decisions, and it fails and it fails and it fails, and then eventually you're like, well, fuck, this doesn't work, and so you stop, and then it works. So it's being able to, and it's funny because like I would think that being a day trader and like scalping would mean more reps, and that more reps would equal more confidence. But in my experience, I used to swing trade for years, and I was okay at swing trading. I wasn't great, but what I was really good at with swing trading is doing, like, planning out what I'm going to do, right, and getting into the trade. And then where I had trouble was losing confidence before my target. Well, guess what? As a day trader, guess where I struggle? The same fucking place, right? I can get in, I've got the plan, I get in, and then I fuck it up. So it doesn't really matter, because then what that would tell you is that it's not reps. It's not how many times you've bought stocks or bought the futures, right? It has nothing to do with how many opportunities you had to look at the screen and make a decision. It's, are you practicing doing the right thing, or are you practicing doing it wrong? And every time I practice doing it wrong, I am rewarding my brain for doing it wrong, because I stopped the fear of losing, right? Like when I exited this trade early, here, like I can say that I could have gotten like 25 points, I only got 10, and you'd think that that's a punishment, but the truth is at the very moment, it saved me from a potential 15-point stop, so my brain was rewarded for doing it. Yep, it is, and it's and I would say futures or scalping, day trading is actually significantly harder, even though you get more reps. The you need a level of focus that a lot of people can't obtain or sustain, because or you need to be so patient that, like, even when you miss entries, that you're not getting tilted, like we talked about before, where like you miss a good entry, you have to accept that it's going to set up again, and you can't start changing the rules because you anticipated to be in a trade and you're not. Like that doesn't happen to me that much swing trading. If there's no setup, it's like, okay, nothing to do, you know? End of the day, like, nothing set up, nothing to do, no question, right? Because I don't want to have to live with the anxiety of wondering if this non-setup's going to pay me out overnight or whatever. But with day trading, it's like, I'm going to get that instant feedback. And if I missed one, I know there's another one coming. And so I might change the rules a little bit and be like, this is pretty aggressive, but I should have gotten in here, so I should just buy this, right? It's like, no, if you didn't think this was long, then this probably wasn't either. Now, technically, I believe that did interact. So it would, if you, yeah. Oh, it was so close. I think it did. I think it did interact with, so you could technically buy, yeah, it did. So you could buy this one for a scalp because it pulled back into the place where all the volume was to this low. And then they found aggressive buyers there. Like, significantly, lots of signals of aggressive buyers. So I could have bought this, or this pullback would have been okay. I wasn't thinking about it. But now that I think now, and in the same sense, if this would have been a green bar, it would have been a buy too. Any sign of aggression or, big volume or whatever, like as long as the location's right and you have this set up, it actually has the potential to break this high. Let's see. We shall see. So again, the blue is the opposite of the yellow. Usually, like the colors are kind of consistent as best I can. So that suggests that the developing volume point of control is here, and we are reclaiming it after getting under it. See how they got over it, and then the sellers reclaimed it, so they got a yellow one. Now buyers have reclaimed it, so we got a blue one. It's choppy generally around those points of control, so you have to be aware that like you're by itself, it's probably not enough to consistently make money if you trade there. But if I already had a reason to be long and I was thinking about bailing and I see this, I definitely don't want to bail because there's a good chance that they're actually going to shift volume higher once they've reclaimed it. Just like here, they shifted it lower. Yep, so this was actually a pretty good entry. What time is it? Oh, it's okay. So It's now power hour. So let's see what this would have done. Do they get stuck right here? So this little pivot here where it's star up then diamond down, it's like they had lots of aggression to the upside, and it was seen by aggression. It was they attacked it, right? They didn't let them have this level, which is where the VPOC used to be. All of this consolidation created trap traders once we got under it. They tried to get into it, and sellers aggressively defended it. So they came down. They came back to where all the volume was. They bought it up again. And now we see if that pivot can get taken. If it can't, well, then it's balanced, just like we thought, you know? Yeah, L period. Yep. Not my favorite. Personally. LM, like, those are, they're just hard. You get new participants, basically, in L period. New participants come in that have not been active the whole day, and the chance for a change in behavior is increased. Now, sometimes that can be a great thing. Like if it's in balance the whole day and you're waiting for a breakout, like bring it on, right? L period, please. But if you've been, I don't know, if you've had the direction like wrong all day, and then it gets to the end of the day, like I will not trade the last hour of it, because I'm gonna get like leveled. They're gonna level me out. They're gonna make me think that I was right and that they're finally flipping, and I'm not gonna it's a recipe for disaster. So if I have not had a good session, like not just saying I'm red, but like have taken stops where I shouldn't have, or just I'm not focused or whatever, I will just give up on the last hour. And actually, if I have a relatively good day, I will sometimes not trade the last hour, because it's really not a good thing to do everything right and then have the results be negative. It's not good for learning. You want your days where you perform really well and do everything right, you want those to be winning days. So the last thing you want to do is do everything right for 6 hours and then make 2 bad decisions that like cost you your whole gains. You're not going to learn to continue doing what you were doing earlier. You're just going to get distracted by the loss. So yeah, there are quite a few conditions where I will just throw in the towel and use LM periods as like learning opportunities. And that's, or even sometimes start my review a little bit early. Or I'll often do a stream, because then I'm not gonna, it's a lot harder to tilt when everyone's watching. A lot harder. It's also harder to focus, but it's, like I said, I can't tell you how many times I've given up good days in the last hour. Can't tell you how many times. All right, this coffee's going right through me, guys. I will be right back. Let me run to the restroom. I will return shortly. I'll leave the algo up so you guys can watch. Be right back.
right. Ready to watch the close. Let's see what they do. I mean, it's a tough call, right? Like, you would think with the gap down and half gap fill that they usually return lower. That would be the like classic market profile way to think about it, is that we closed low yesterday, we gapped lower, we retested, which is normal. They ran into basically the overnight lows and then rejected. Like, it's pretty hard to come up with a thesis that would say in the short term that it's bullish. And so hopefully everyone sees that. But the truth is that there's also shorts stuck at the lows because of how much volume we put in down there. And we've been balancing for 1, 2, 3, 4, 5, 6, 7, 8, 9 like periods. So yeah, that'd be perfect, Simsum. I love that idea. Swing up, steal some stops, roll over. That'd be a beautiful short. I might even, to be honest, if we do that, I might even buy puts in case like tomorrow's NFP is like really bad, well, really high. Like that, the opportunities for puts there is actually pretty good too. Like you could buy some lottos even, and like hold them overnight. I'm not against that at all if you get the right price. The more difficult question is what conditions would get me long, and like I said, you don't want to fight the sell programs, just like you don't want to fight the buy programs. So if you have evidence that they have like active momentum going to the downside, you just don't fight it, just ignore it, right? And the algo will continue to fire the signals because the order flow will still be aggressive in both directions. Like they will, in other words, the buyers will still try to hold support, and the algo doesn't know like how to like figure out whether or not it's like this is aggressive compared to what, what they're looking at is compared to like the recent order flow. It's aggressive relative to like the last few candles or relative to normal. But if they've got heavy selling here, I can show you in the morning. If you've got heavy selling, the algo is still going to tell you when buyers try to save this, and you can't just buy it because it's a star. If you can identify that here's another one, right? Like, don't buy that when the sell program is clearly on. Look at where see how all these supports got broken. They're not going to turn that around with one star, right? So you can't just, you can, but you don't do very well if you just buy every single time you see a big buyer and sell every time you see an aggressive seller. Like, you need more context than that. And when it gets choppy like this, you can get very sudden rushes of momentum in one direction or the other, and get caught off guard if you're not careful. So, but like I said, the only fear with puts is that you would be committed, because the NFP comes out before open, you would be committed to hold them through that release. So like, I'm talking about a play where you buy enough puts where if they went to 0, you would lose an R. Like you buy them for like tomorrow's close, out of the money, and if you're right, you make a little something. If you lose, you lose whatever risk unit is for you. If you risk $400 a trade or whatever, well then you find the puts that you can get for $400 for premium, and then that's your risk, is that you're wrong and they go to 0 basically. I don't think there's anything wrong with that. Just be sure that you also sell them to take profits if you're right. But I mean, what you don't want to do is buy 3 weeks out of the 3-week expiration out, and then you open the broker tomorrow and you're down $300, like you're down like 50% on the puts or something because it like flew higher, and then you're like, well, I guess I'll just hold them, even though you planned on only risking that. Like, if it's going to cause you to make mistakes in your decision making, like, don't do it. But NFP is that, it's always wild. And of course, the options have that
volatility priced into them. So you're paying for the opportunity to take a risk, which is kind of shitty. So got to keep that in mind. That you actually are paying you're paying more in premium for the opportunity to have volatility, and that's just the way options work. But it means that when the event actually occurs, if you're right, you're not going to get paid as much as you think you will, and if you're wrong, it's going to hurt more than you think. Shitty, but that's the way it works. Which is why straddles are usually a good idea. But I'm not going to do that in this market. But back in the day, like, straddles worked so well. I'm not touching that right now. This yeah. Bear markets are wild. Like that, the chance for like a 3% up day, like go up every single time we have a 1% down day, right? And we've had plenty of them recently. So the chances of some face ripping rally are much higher than you'd think. Just because of positioning, people get so short at the lows, and everybody exits, and then there's all this money on the sidelines that's mandated to get pushed in every time it like goes over a certain level. So it's just, and then the gamma squeeze, it's all a mess. But yeah, I think micros are helpful. I agree. Now we have to keep in mind, like, depending on how, if you're trading a prop account, you can't hold over the micros. Even you can't hold over settlement. If you're trading a well-funded cash account, you can. But you can also just wait until London. So I don't mind that if you get a good price, because that way you can have a real stop. You know, like a hard stop that actually gets. You might get a little slippage, but you're not going to get. You know, with the puts, you could literally open we could literally be 1% down, and you just lost 50% of your options premium, and you couldn't even do anything about it. So that's the shitty part about options. Oh, did you lose your blanket, cat? Here you go. Okay. Let's see. Is there anything to do here? Notice how the pace gets really slow when we start to chop, and that's why there's barely been any bars even. Like, look at how few bar here. I've got a way to look at this. 20 tick has zigzag. So I've got the zigzag on this one. And look, it's 8 minutes, 2 minutes, 5 minutes, 5 minutes, half a minute, a quarter of a minute, and then 2 minutes. All of these little tiny moves. But then look at the how much we've moved. Negative 39 plus 26, negative 15 plus 23, negative 29 plus 18, negative 19. It's barely moving 20 to 30 points. And if you add all these up, it's like 10, 20, like 30 minutes in a 30-point range. Whereas back here, you can see we were moving 50 points in 20 minutes. So all of this took less time than this. And if you when you start to, there's patterns there for, like, if you can keep an eye on that or just have a sense of tempo, there are ways to help figure out what you should be doing based on tempo. Let's just say it that way. I don't want to dig too deep into a totally off topic conversation, but once you get to know what normal is, it helps you figure out when not to trade. And personally, I don't really want to participate in this. And like on ES, it looks like it's like no better, right? On ES, it just gets chop, 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 chop. Like, that sucks, right? Like, could you now? And then the problem is even with the algo. Remember, you get triggered into a position when these bars close, because they can change while they're live. They can change color. Anything can change. But once they close, they never change. They don't repaint. It's just that they warn us ahead of time that, like, hey, if this closes bullish, it's going to be pink. Well, it might close bearish, in which case it can't be pink, right? So you can't really make any decisions. See how the star shows up all of a sudden? That will disappear again if it closes bullish. So it's giving us a warning that like, hey, if it's bearish, you're going to get a star. But if it's bullish, and you'll get a triangle down. But if it's bullish, you'll get pink bar. But obviously no down star because you need a down bar to get a star. So it's a warning ahead of time. But you really can't make any decisions because you don't know which ones win until you get the close. And so what you'll see is when it closes, this triangle and the star will disappear and a new signal could show up, or it might just be a white bar, but you don't know for sure till it's closed. So the problem with that is it means look at where you're getting, if in this chop, look at where you would be getting signaled in. You'd be getting triggered in here for a long or here for a short. You're basically at resistance for a long or at support for a short. That's not what you want, right? You don't want to be getting triggered in here. And yet that's exactly, I guess technically it's not quite that bad, but it's you're getting signaled in there, going long here or short there. That's not great, right? So you can't use those signals like that in a chop market. What you have to wait for is for one of these apexes to get taken out and then get them to trap back into there. So the middle becomes your target, not your entry. That's how you trade that. But a lot of people get stuck on like, I must buy every green bar. It's like, well, this one will work, but this one probably won't because you're not going anywhere. There's no range. You're not going to get paid for every time you're right. You'll be right, and then it'll go 3 points and turn around. So, and then it'll take out your stop, and then it'll run your direction. So it's just, yeah. Let's see. Let me catch up here. Trade period low was the trade for yeah, we can look at. Let's review it. After this, I can look at ES, and we can see what that looked like on the algo. Because I think it's even though you obviously can't trade in the past. It's useful to sort of see like what could I have caught if I was like paying attention, and was there a signal that would have gotten me long, and did I know to be looking long, like what, and then you can kind of from there either develop new signals or help decide which signals to follow when. Why did I have this marked? Oh, it was the VPOC of the rave to the low. Okay, so technically if this turned green now, it would be an entry to get back up. But like I said, I don't love trading this personally. But what I would trade is a test up here that got rejected, or maybe a test down here that got a bounce. Those traps are usually pretty good. But yeah, don't buy highs and don't sell lows in consolidation. Exactly. And it's funny because you'd think we all know that, right? Like we all know that's not a good idea. But it's funny how when you work with a system that is so consistent in certain conditions, your brain will just like make you click the button because you saw what you know works so often in different conditions. It took me a long time to not sell this and buy this because in so many other times it works. Like you can consistently buy them. Like if you're bearish, you can just sell all the orange ones, and like most of them are gonna give you lower. But knowing that like this one might look okay, but when they trade up like this and then come back down again, like the chances that this one's not gonna get stopped out is low, because what you're doing here is just chopping. And so what they're gonna do is they're gonna take all the stops, and then they're gonna flush it. So which one do you want? You want this one, where they took out the highs first. You don't want this one. Sorry, that's a lot of lines. But you want to take this one when it's choppy. You want to take this one, not that one. And it seems arbitrary, but believe me, like especially on ES, like the difference between 5 points lower or higher for your entry is literally the difference sometimes between profiting and not profiting for your day. Like even though I might make more than 5 points, if you misplace your orders by 5 points every time, you're going to get stopped out in spots where you should never be trading. And the easy fix for that is just know when you're going to trade and when you're not, such as don't buy at the highs of consolidation and don't sell at the lows of consolidation, no matter what you see on your screen. it certainly helps to have some of that understanding under your belt before you start working with a system, like a visual system like this. But I mean, I actually have seen traders who've had very, very little experience reading the market actually do okay. That's a trap. That's technically a long if you want to target up here. It's a scary time to get long, but that's technically valid because it traded below this one. See that? And it signaled a star. It's technically valid. I'm not taking it, but I could. I just don't think it's bear. I don't think it's bullish. That's the problem. If I saw evidence that we had buy programs running, I would take it, but I don't. See, the last time, yeah, this guy should not have printed down here, and this guy should not have printed down here. If we were gonna bounce, those should have been going in the other direction. We shouldn't have been able to spend any time down here. The more, if you think about it from a market profile point of view, here I'll show you. We've built volume below market profile. So obviously, normal day, normal distribution, right? But here, I'll draw the lines here. So if you look here, you can say, well, where are the lines in the sand? Where are the current lines in the sand? Well, you can see this is the very middle, right? That's the middle. And so if we were going to be bullish and not balanced, we should be putting in higher lows, and we shouldn't be putting any volume below this, right? You can test below it, but we shouldn't be putting any volume down there. Well, that line is here, and you can see they're putting bearish bars underneath it, and one of them has the VPOC below that level. So they're putting volume down here. It doesn't mean it can't bounce, but the likelihood of it happening is lower because it's balanced to bearish, basically is what I'm trying to say. The tilt, because look at the other side. Look at the other side of this. Here, I'll do it the other way. Maybe this will help if it's not clear. The other way, if you're like, well, maybe it's, what does it have to look like to be bullish? Okay, well, here's the, oops. Wrong tool. Here's the middle, right? So if it's bullish, we've got to develop some volume above here. See how it's just the opposite of this? This one's on this one. This one's on the same period, right? We should be able, if it's bullish, we should be able to develop volume above that. Here, I'll change the color. We should be able to develop volume above the green line if it's bullish. And you can see we certainly can't. No, there's an aggressive buyer up there, but he didn't get any follow through. These guys got rejected. It doesn't have to go lower, but am I confident that that like there's people buying this market? No, I think that if anything, they're not even participating. But anybody who is participating is probably selling, because again, they know they shouldn't be selling at the lows of consolidation unless they think it's going lower, right? Like assuming that most people make the right decisions more likely than not, like the big volume should be doing what is most optimal. That's usually the case. Volume usually confirms a move. So we shouldn't be getting volume going lower if we're actually trending bullish. But that could change. We could all of a sudden develop volume higher, and then it could bounce, and we could get a rip. But as the information I have here tells me that this long is not as good as a short that went above this and then rolled over. I would rather take the short, since it seems like this is the easier way to move. Yeah, I agree. I mean, it's almost like no one wants to participate pre-NFP, which sort of makes sense. I think because keep in mind, the Fed meeting, there was basically nothing new other than maybe dashing any hopes that there was a pivot coming in the next couple weeks, which was ridiculous to think that that was going to happen. But I think a lot of people did believe it. And so the people who thought it's going to be a big pivot or never going down again, like they're out of the market now, right? Like those buyers have now exited. But there's really no new information that told us that it's more bearish than we expected or more likely to go higher. So the obvious thing to do is to flush all of those buyers out who basically just FOMO'd in because they were afraid they were going to miss out on the pivot. Once they're out of the market, there's really nobody else left to sell because there's no new negative information, but we can't squeeze because of NFP tomorrow. So thinking about this from more like a macro standpoint, the what might work is preparing for a squeeze up if the NFP is even slightly cooler than expected. We could actually get a massive squeeze because anybody who expected a pivot is already out of the market. And that means that some people are short. But what the most likely, so like the pain trade, basically, they say, is to the upside. But what most likely thing to happen, because just looking around and living in the United States, I know that I do not see any signs that prices are decreasing. I haven't seen the number, but if I had to guess and just like looking at things I buy, I haven't seen any changes. So my guess is that it's going to come in line or maybe even worse than expected, more inflation than expected, like higher prices. And if that's the case, then there's a new reason to sell, and so you're going to get the sell programs turned on for sure, right? So like when you try to anticipate these numbers, the risk is that the volatility is much higher than you'd expect. So yes, perfect. Simpson, that's right. Shorts in and liquidated longs with cash on the side. That is, and what the result of that is balance until you have new information. So another way to think about it from our point of view is where, if you had to choose where you have the best edge, is it going to be in this sort of situation where no one's really making any decisions because everyone's already gotten positioned for the event coming up? Or is it after we see the reaction, not the number, but the reaction to the number, then and everybody has to get rebalanced? In my opinion, the edge for me with the algo and my just idea, like my understanding of the market, is going to be after the reaction. It's going to be reacting to their reaction. Whereas I don't have an edge when everybody's already made a decision. They're either out of the market or they're already in because the trend is lower, so they're just going to be short until they have reason to stop being short. I don't have a lot to do, and clearly a lot of people feel the same way because the market's not moving, right? And so you can't force a trade, but you can look at those little hints and say, well, they're able to develop volume below the midpoint of this. The other thing you could do is you could take the volume profile of the entire, so the consolidation technically started all the way back here. In fact, you could say that it started all the way back here, right, is where the consolidation started. So if we take this whole thing, hi cat, that didn't even make it. Yes, okay. He says buy calls, I don't know. Oh, puts? No, calls, right? All right, he says calls. I don't know, Ronan. You do whatever you want with your little. I should give you a paper account, Ronan, and every time you meow, I'll buy something for you. We'll see how you do. Okay, so anyway, the consolidation, you could say, started right around here, right? And so, oops, I've got two of them. Let's make sure there's not. Let me redo this. I've got two of them here. Yeah, meow trades, exactly. Who knows? Maybe he's really good. I don't know. He's watched a lot of screen time. He sat in my lap and watched this a lot. He might know exactly what's going on. So here's the volume point of control for this entire thing. It's right in the middle. Does that make sense? Absolutely, right? We're balancing. It should be in the middle. So now we can say, well, does either side have any advantage above or below? So what happened below versus what happened above? Is anybody extremely trapped? Are there really heavy shorts at the lows down here? Stars? No. Orange bars? Diamonds to the downside? Only in the middle, right? In the middle, yes, and that makes sense. Not at the lows. Okay, how about bulls? Are there any bulls that got aggressive at the edges? Yes. there's that one, right? So what does that mean? Usually it means they're going to try to trap them, and that the easiest trade is going to be if they reject this, short it, because it means that they came back to where that aggressive buyer bought and he turned into a seller. Obviously, don't short it blindly, right? But if they get up here and then they find more sellers than buyers, it means whoever was being aggressive here is no longer interested in buying that level, right? I technically need to get it over this line to take it because it's balanced and I don't expect it to go very far, very often. But technically this was that same trade, right? It came up into his range and they rejected. So it may have already happened and it may just be chop, 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 drop. And that would be unfortunate. It just didn't set up the way I wanted it to. Like I would have the direction right, but my process that keeps me from selling when I shouldn't be selling said, if you want to have the high odds entry, wait until they trade above here and confirm that they're still selling, and then you're good. I didn't get that, right? So if I took a short now, my stop would have to go somewhere up here. That would suck, right? I don't want to do that. I want like a 15 to 10 point NQ stop. I don't want a 20 to 25 point NQ stop. So I have nothing to do unless they can trade up there and reject. What? Come here. Let me show you. Look, what do you think? Come on, cat. Do your magic. What do you think? Hot NFP, Ronan? Way too hot? Cool? Oh, he ran away. He ran away. I don't know what that means. I don't know. I guess he stays on the sidelines. He wants nothing to do with it. The intuitive cat says don't touch it. No, I agree. Yeah, there was a time when that worked to the upside, right? Back in 2020 when everything was in one direction, you could put your stop just like below the swing low and hold it, and you would very rarely get stopped out. And a lot of people learned to trade like that, and it was working. And it pissed the shit out of me at the time. It was because I wanted the trap, and I wouldn't get it. It would just make a higher low, take off. Now that same trade technique is troublesome. Let's just say that. It's not going to work very often. Totally easy mode, exactly. And the key was just don't fight it, right? And I understood don't fight it, but I ended up missing many of those rips because I was just not willing to adjust my aggression up. You know, I was too timid with some of those moves because they didn't set up how I wanted them to, and so I just missed a lot of it, right? I mean, thankfully I wasn't short the whole time. I know there were people that like lost fortunes trying to fight it, and that could have been me. I learned in by April, May, whatever that was, when after we had that big higher low, I was sure that was going to get taken out, and it didn't. After that, I was like, nope, don't short. If they can't take out that higher low, don't F with it at all. And until they took out that higher low, I was not shorting. But like I said, I missed a lot of big days just because they opened, they put in a low, they never took out that low, ran all day, right? And those trend days are you just have to be so confident in your direction, and you have to be willing to put your stop pretty deep, you know? And like I said, if you wanted to do that here, you'd put your stop down here and you'd buy it at the breakout once it broke out right here. That kind of play worked back then. Do that, not try it. Like, go do that in back. Don't do it in real life, but go paper trade, like replay the last like 3 weeks, and just every time it breaks out, buy it and put your stop at the low and see how you do. You'll get totally ruined, right? And that's normal. What people didn't realize is they thought that they think that's abnormal because they're so used to what it was doing, but that's not normal. Yep, confidence and non-attachment. Agreed. right there with you. We seem to have a lot of the same leaks. Because that's me too. It's being confident in the system and confident in my reads, despite like having some evidence that's suggesting that there might be someone else who disagrees with me on the chart, right? Like seeing there's some aggression going in the other direction will not necessarily sway me to switch directions, but will get me less aggressive than I should be. And then getting attached for sure to like the even if it's not a big like today, like I don't it's my performance is below average. Like I've got a 60% win rate, which is fine. It's not great, but it's fine. And I made just $200 and then had to pay commission, so plus 170 day in 15 trades. It's a slow day is what that is, and it's I missed opportunities is what that tells me, right? It wasn't a bad day. I didn't make a ton of bad decisions, but it could have been. It should be my average day is $200 to $400. So if I can't even make $200, but I'm getting a 60% win rate, it's like you probably didn't take the opportunities that were presented, and that's exactly what happened. Right? I'll point them out later. But when I did get into trades, I got out of them too early, and there was at least one point that I saw right at the moment where I knew I should be in, but I didn't get in, and then it ripped for 100 points. So it literally could have been a $2,000 day had I just done like 2 trades slightly differently. And that's what's so crazy is that like really the difference between winning and losing a long term can literally just be, did you take this trade over and over again, or did you only take like what is it? Where was it? The trap trade back here. If you just took this every time it shows up, where it goes underneath and comes back, if you just took that every single time, I'd be doing fine, right? But instead, I took the aggressive trade and I didn't take the conservative trade, and so I got stopped out, missed that, and then didn't catch on until here. So I missed this one too. And so again, is it still a win? Yes. And then I padded it a little bit with this short, but I missed this one, and I took profit here. So again, not saying I did anything horribly wrong, but I see where I have work to do, and I see where that work is. So that's a good thing. Like knowing what you did wrong is actually a really good thing, and I documented it too. So I'll do the other one later. We're gonna do a review after this is closed. I wanna take a look at the morning. I was really passive this morning and only took I think like 3 trades in the morning, and I want to see if I might have missed a short as well. But yeah, it's true. You just got to move on. You just gotta you got to be kind to yourself and accept that you are where you're at. Right? You're not gonna be perfect, and what matters is that you're prepared for the next opportunity. Because, like we said before, the absolute worst possible thing you can do for your trading career is to dwell on that mistake and then make it again over and over again. Like, because you're afraid or whatever. Like, it's okay not to be perfect, but what's not okay is to like not learn from it. And you can only learn from it by accepting the mistake and figuring out, what do I have to change to be better at this, and what kind of suffering will I have to endure to make that possible, right? Because you anything that you're doing like is probably because it's natural and more comfortable to do it the way we're doing it, but it's not optimal from a trader's point of view. So if you want to improve your trading, you're going to have to endure some suffering. It's just the way it's going to hurt. It's going to hurt a bit. But the difference is, the point is, you're not taking that pain for no reason. You're taking pain for a calculated reason. You're accepting a level of suffering with the understanding that that suffering will be short term, and that the result of all of that suffering over and over again is actually bigger profits. But I can tell you that, I can explain exactly what you should do, and I can show you where to do it. But actually doing it in the moment when it's my money on the line is tough. Very tough. Yeah. Man, it's like the best, it's the best way to learn about yourself that I know. Like, I've talked to quite a few people who are like aspiring traders or learning to trade, and it's the transformations that are possible just through the process of like working with a coach or doing some journaling and like really digging into like why do I keep making the same mistake. Like there's not just trading benefits but like personal growth and like emotional control, improved like understanding of like why, because if you're doing it wrong in trading you're probably making mistakes in other parts of your life too, whether it's like relationships or your real job or maybe like fitness, right? Like other things that require a level of commitment and decision making and like living through suffering for the benefit of the greater good, right? Anything which is like life in general. Most of those things you could probably improve on because none of us are perfect, right? Like we're all human. But if you can fix it, think about it this way: if you can fix it in trading, then that probably means that you have a potential of improving the other parts of your life just by doing the exact same thing, right? Because trading is fucking hard. Trading well, anyway. I mean, pushing buttons isn't hard, but trading well and improving and being consistent is tough. So if you can do that, then like growing as a person and improving other aspects of your life it's basically just the same thing. So it is almost like taking a self-help course, and your payment for the self-help course is your losses, unfortunately. But yep, whatever. And that's why people say, if like you're having a crisis or fighting with a spouse or relationship issues, or maybe like some other, you have something else on your mind, you really should not be trading, because you're going to project those issues onto your trading, right? But yeah, exactly. Get paid to become better. I agree. Yeah, better version of yourself. Perfectly. Couldn't have said it better myself. Exactly right. And that's the great thing, is if you do it right and you have a process that you're consistent with and you know that it should produce profits over time, you will benefit from improving your trading. You will. What you won't benefit from is running the rat race, doing the same mistakes over and over again without a process to fix them. That is what will not pay you. And unfortunately, that's what most of us do, is we make the same mistakes over and over again and then don't end up, we miss out on opportunities, right? And that's probably why like it's so tilting for me to see those trades work and me not be in them, is because in the grand scheme of things, it's that sense that I should be way better at executing this by now, right? That subconscious feeling of like, why can't I just do it right? Like it's just a reminder of those challenges whenever I miss a trade. And so the deeper that issue gets, the more likely I am to repeat that mistake. So what you need to work on is, how can I prove to myself that I am capable of doing it right, rather than dwelling on I keep making this mistake. Instead, it's like, well, then let's find a way to help you not do that anymore, because it's just built. I'm creating the fear by fearing it. I'm afraid that I'm not improving enough and that I'm not like seeing fast enough results, and as a result, my actions keep me from improving more and seeing bigger results. And what I'm finding is like I pretty much had things figured out more or less when I was only trading like 2 setups with 4 or 5 micros. Like I would have pretty consistent days, and then as soon as I tried to increase up to 6 to 8 micros, I struggled for like a couple months. Now I've got 6 to 8 micros pretty good. I don't really get tilted very often, but I've been trying to move up to trade the minis. And the days that I trade poorly when I'm trading minis are like blow up bad days. Like they feel really bad. Even though the number of stops is not all that bigger, psychologically seeing the comma in my loss is really hard to deal with, right? Like the days where I lose like $1,200, it's like, truthfully, with 2 minis, that's like 2 stops in a row. That has to be okay. My system does sometimes take 2 or 3 stops in a row. But when I see that $1,200 loss in my brain, all I can think about is how much work it's going to be to build that back up, and it keeps me from trading optimally. So that has been sizing up has been really challenging. But yeah, yep. Cool. Glad that's helpful. Yeah, list evidence of all the times you've overcome an issue, and then read it off when feeling tilted. Love it. Love it. Thanks for that. Yeah, and I think that's why journaling is so helpful. You know, people say it's not just the process. I mean, the process of writing it down helps you believe it, but when you're tilting, being able to go back and be like, okay, I had a good week. Let's read what I was doing on that good week. And you, you see that you were probably following the process, and you had evidence that you were doing it right. You know, you were aware that you were doing it right. So we actually got a signal here, but I didn't take it because it was in the middle of consolidation. If this would have been above this, I would have taken it. I would have taken that short, but not down here. If you thought sell programs were on, and like I said, we did have evidence, right? We had bearish bars underneath the voodoo range levels. We had bearish bars underneath the we were developing volume down here. We were struggling to save this buyer at the highs. I could have been aggressive and taken that, but on a day where I'm kind of like teetering on break even, it's pretty hard to take a end of the day loss, because taking a full stop there, and the thing that would suck if you take this trade and they come back and then they drop it, guess what? You have to take it again, right? Because the best odds trade is this. It's this one from up here, right? So you can't take this one and then not take this one. That's exactly what I did this morning. I took the aggressive trade. This set up exactly the same. And I skipped the one that came. It took my stop, didn't close below, and trapped right back in. I know I'm supposed to take that star. And I didn't take it, and look what you miss. And instead I just got to stop for it, right? Whereas losing 15 points and gaining 70, look, it just kept going, right? So it's the same thing in the other direction. If you took this and then they came back, stopped it out and dropped it, you got to take it again. You just have to. Or stop taking the aggressive one and accept that sometimes it's just going to roll over, because you can't take the aggressive one and not take the conservative one. And that is something that's been really challenging for me to I know that I'm supposed to do it that way, but actually doing it in the moment is hard. Right. That is the solution. Just decide which ones you're going to take and just take it if it fits parameters. Exactly. Trade. Once you have the process, trade the process like a computer. That's the really good traders. I know let me put it this way. I know very few very, very successful traders that don't do that. Maybe 2 that I know that don't have clear parameters where they short or buy every single time a certain situation happens, and instead go a little bit more off of intuition. This one felt a little bit stronger, so I decided not to do it, or whatever. That. I think I know 2 traders that are successful, let's say. I don't even know how profitable they are, but have stuck with the game, are still around as long as I've been here, right? The majority who aren't able to just choose parameters, follow parameters, execute trade when parameters are present. The ones who can't do that, eventually grind their way out. So it's if you want to be on the side that collects the profits, you need to accept that is the solution. It's just run a program. And if you don't have a system, then get one. I'll be honest. Before I knew about Simon's program, I didn't have those parameters clear. I knew what it looked like, but it wasn't black and white objective. And if you have one that works, just use that. But if you don't, it's a good system. It's just no matter how good the system is, though, if you can't follow it, if you don't trust it, it's not going to matter because you're not really trading that system then. But what you want is something that you can really trust to the point where you just take them all the time. Here, we'll put ES over here so we can watch that too. Should have done that before. So this is ES, this is NQ. Oh, it's like the last 10 minutes of the day. Wow, so they're gonna sell it off. That's interesting. I mean, it's not super surprising. But I'm curious where the buyers will show up. It would definitely be a bad sign if like they just flush it, because then I'd almost wonder, like, does someone know the number's bad? You know, I hate to say that, but let's be honest, like someone knows the number, right? So when they just like totally dump it, like literally dump into the close, yeah, my first thought is like, if you're long, you're probably in trouble, you know? They did. You're right. That's right. ES did take the open just now. Good eye. Yep. They are. Yeah, I'm telling you, they do. They do. So 32 is the open. They got it right back to it. Will they save it? Right? Did I have that right? 32? I think so. Yeah. 32. Right there. That's the open. Okay? A purple bar underneath it would be potentially good, because that suggests that buyers are pulling their orders, but there aren't really any sellers following through. Let's see if they can get a purple bar here. Or a buy bar, that works too. Oh, interesting. So that blue arrow right there, oh, now it's gone. If it's there when it closes, it means there's absorption of sellers. It's beyond just buyers pulling orders. It's like someone's basically stacking or reloading, or like an iceberg, basically. Same concept. It's not actually exactly an iceberg, but it's absorption. Every time they add and try to sell, someone just adds to their order. But yeah, there he is. Let's see if it's there when they close it. Oh, they are going to get it. Are they going to get a purple bar? Like I said, that would be not bullish, but doesn't look like they're going to get it. Let's see. You really don't know. I'm watching over here. You can see we got absorption here on Q already, and they traded right through it. So now they would have to get it back up here above this bar to have me even think about longing. But no purple bar. No purple bar, no blue absorption, nothing. Really, no way I would even think about buying it, basically. Because had they gotten the purple bar, you could have technically like said, if they can just get above that and establish volume above that, maybe they would hold it. Someone's definitely trying to, but it is the end of the day. It's like literally the last 6 minutes, so we shouldn't be totally surprised to see someone interested in buying at these levels. Like on a higher time frame, someone, is basically mandated to buy it down here. So they got purple bar. Can they get a green bar? That would be the first sign of someone trying to save this level, and it's right at the Voodoo range level, so that would be a sign that the sell program might be over.
Motion detected at the front.
Hold on. Be right back, guys. I don't know if it's just a package. Let me see. Oh, he's just dropping off some ad or something like that. Whatever. Okay. All right. Someone at my front door, but he don't need anything. He's just dropping something off, I guess. See, they're trying to absorb it, but they're not succeeding, right? They're not getting anywhere.
about to close.
Yep, exactly. I know, and I like it. I'm okay like seeing that because it's like, realistically, could I have just held short through this whole thing? Probably not. Personally, I'm not gonna sell and hold this whole thing. But like you're saying, ES, like if you kept selling every time this whole thing was technically sell, but it's pretty hard to execute in the middle. It just missed the trap, unfortunately. It would be pretty hard to execute in the middle of this consolidation, anticipating that this one will drop, even though this one didn't and this one didn't right away, right? Like it looks obvious in retrospect, but like it personally it didn't set up perfectly. So I'm not. You're gonna miss it sometimes, It's just how it goes. Yep. No, I agree, and I think that's okay. Like it's good that you knew what would have gotten you in the market, and as long as you would have known to hold that position had you been triggered in, I don't think there's any mistake there. It's just, both of us were a little bit more conservative than what we needed to be if we wanted to get something to work. It just didn't set up the way we wanted it. Like that's just how it goes sometimes. That's just how it goes. But yeah, we did have evidence that they weren't able to support buyers up there. They rejected value or high, like you said, and they couldn't get any volume. Anytime they did get volume up here with aggression, they immediately sold it off, and they were developing volume below it. And that we probably saw the same exact thing here, if I had to guess. See, they had this was a little bit better. They had this guy pushing high and hard. It was so close. Look how close that is. So close. A couple points more, and that's a valid sell for me. But I can't just hammer in the middle of consolidation. I don't, because even though it worked this time, like, yeah, I would need something more than that to get me short there, and that's all right. We had it right, exactly. And think about it. You had the direction correct, right? And had it set up the way we wanted it to, it would have been a great result. And so the only you can journal about it and be like, here's how I feel. Here's why I didn't take it, and here's the conditions. And then you can go back to like random days in the past and look for those exact same conditions and see if there's anything that's repeatable that you could have caught, right? So, for instance, like in this case, I was saying, well, perhaps after consolidation, if you can get an aggressive buyer to come in at the end and then see him beat by an aggressive seller, maybe that's a pattern that plays out often after consolidation. Let's go look, right? And then you just pull up you basically just have to find other balance days and see if they played out potentially the same way. And yeah, that is, you will learn a lot from that. And that's how a lot of my setups got developed. But yep. Right. I know. Exactly. No, I agree with you. That's exactly what I asked too. If you don't, so here's my answer to that. If I don't have evidence, see, it's set up here too. If I don't have evidence that star up followed by diamond star down or whatever, if I don't have evidence that consistently results in breaking out of a consolidation, if I don't have literal evidence that is not usually going to do this, I won't hold it past this. I know it, right? It's just, then it just becomes like, that's intuition. Looks like they're probably failing. Let's see if I can grab 10 points. Maybe I hold a runner, but probably not. I know that there's times when star one way and diamond the other way does work, but like star, diamond, star fails, right? So it's not like you can just find those two together and say every single time, and then there's Is there another one up here? But I think it specifically might be good. See, this is after consolidation, right? But I think it might be specifically good when it's in the direction of the trend. Like this was going down, and so you'd want to take it to the downside if it shows up. And then here, it's lower highs. See that? Lower highs. So we already knew that we were more bearish than bullish. So this star diamond. Here, let me erase the lines. It set up twice that way. So bearish, star up, diamond down, goes lower. Star up, diamond down, goes lower. So I could go back and say, okay, well that worked twice in like a matter of 2 hours. Like, what about other days where I know the direction? It's consolidating. Let's see if we can quick find one. So we need consolidation following a trend. And we want it to see what happens if they put star one way and then diamond with the trend. See, this is not consolidation, but that technically did work. Star down, diamond up, runs. Interesting. Here's down. So let's check this down wave, right? Let me just see. Late longs plus margin call. Yeah. No, there's also, what the hell? Go, get. What are you doing? Oh, he knocked down hopefully I didn't lose the stream. It's playing with my router. Okay, I think we're good. So, all right, so we're in the down rotation, so star up, diamond down. So white star followed by a red or pink diamond. I don't see any white stars anywhere here. Oh my God, you're relentless. Go. Once he found something that he can get my attention for, he just keeps going at it. Here we go. Star up, diamond down, pink diamond, star up, diamond down. Okay, that's interesting. Star down, diamond up, star down, diamond up. Huh. Okay. I'm sure it doesn't work all the time. That is not a pattern I generally buy or sell on. Here it is again. Star up. Oh, that's star up, star down. Never mind. No. Yeah, I think you're right. Yeah. The cat is like, I told you to buy puts, motherfucker. See, here you're going down, and so you have to be really careful not to buy the diamond. That would be bad. Oh, star up, diamond down, gets beat. Obviously, it's not 100%. I don't see any other that are lined up one right after the other in the right direction. I want it to go with the trend preferably during consolidation. So I need here star up, diamond down. So white stars, I don't see any but this one. No. Okay, down, right? So white stars, diamond up. No. They obviously don't happen that often. Oh wait, no, yellow stars, diamond up. So yeah. Nope. I don't see any right after one another. Yeah, he's upset. He's like, I told you. It definitely is not a pattern that plays out very often. Just trying to quickly scan for it. Go! These are two. So this is consolidation, right? What's the direction? Down. So let's start here. So we're looking for star up, diamond down. And see, this one's in 3 bars. And that actually works. Diamond up, diamond down, star up, star down, no diamond. It's not very often a pattern that we see. Here we go. Star up, diamond down, gets a scalp. Okay. I mean, it seems to work more often than it doesn't, as long as you have the direction right. Here's that 3-bar combo. Star up, purple diamond down seems to work too. Okay. Now that's the middle of the night. Consolidation. Huh. Star up, diamond down, gets stopped out. It's obviously not 100%. So what's different about this one? That looks very similar to what we saw today. Move down, big move up, consolidation. We can't break the top. They get star up, diamond down, goes lower. This one just rips. It's obviously not 100%. So here, well, let me see. Where was the volume on this move down? Is it way up high? Where the hell is it? It's got to be up here. So it's way up high. Where's the volume on today's? Okay, so here's the trigger. Is the volume down low? Wow. Okay. There might be a setup here. There might be a setup here. So here's the idea. Have an impulse move. Develop volume on the far side of that. So if you're trading down, volume near the low. Oh yeah, you bet, Simsum, you bet. Thank you. I appreciate you sticking around and checking it out. I'm gonna quick do this, and I'll probably come back for a trade review in a minute. I just want to see if I can maybe figure out this pattern here, because this is how you get better, is you do some studying. So, but yeah, definitely appreciate the interaction, and I'm glad you enjoyed the stream. I'll see you next time. But so here we've got impulse move down. The volume for this, the volume point of control, is near the low, not at the low, but near the low. And so now star up, diamond down works. Diamond down. What I'm thinking is that these diamonds may need to have a high that's higher than the volume. It may need to develop up here and fall into the volume for them to work. See, the VPOC is above the volume of this big down. That might be one of the reasons why it worked here. So here, let me take the 80 tick. 80 tick. And let's rewind a week. However far I can go before I lose all my signals. And then we're going to measure the same exact thing on a trend day or whatever and see if it plays out. Okay, so let's start. So this is yesterday. No, I don't want to do yesterday. That's Fed. I don't really care about yesterday. Let's do Monday or Tuesday. Do I still have signals here? I do. Okay, Tuesday. That had some impulse moves. There needs to be impulse moves. Here's Monday. As long as I'm getting diamonds and stars is all that matters. I see plenty of stars. I don't see red and white diamonds yet. Here's the first one. Okay. So we certainly have data back to here. So trend up, right? Impulse move up is here. Volume here. So I would need the diamond to be underneath this. So star down, diamond up. So the green bar might work too. So this would be a buy because the VPOC, well, it's pretty close. This one, VPOC below, closes above. Oops, I can't point to the right one. Now this one doesn't have a star behind it, and it's not a diamond, but it's the same concept. So here is star down, diamond up. And it goes. Now this one, the diamond is above the VPOC. But we've already, it didn't happen in the consolidation. It happened almost like a breakout. But again, the volume for this move down is at the lowest. Let me just see if I do the volume starting from all the way back here. Oh, that's the low. Wait, no, we went from the high. I mean, to the high. So what if I do this? Way down here. Okay, so it's not that. I'm pretty sure it's off the low. What makes sense to me is this. interacting. But this is actually above that. So in that case, we've already gotten back over the VPOC. That might be, it might be that simple. Get over the VPOC of the impulse move in the direction you're going, and then any consolidation can be broken, maybe just with the diamond. Or maybe just a trapped seller. So let's see, does it continue to work? We're looking for stars down, followed immediately by diamonds up, or maybe stars down followed by green bars up. These ones actually produce a little bit of a pullback, so that's not what we want. That one, star down, star up, immediately pulls back, so that's not good. Star up, diamond down. No, we need star down, I think. Or at least diamond up. So white diamonds, I will say that the diamonds up are working. Diamond up, diamond up, diamond up. So it might just be as simple. This actually might be easier than I thought. It might just be put in an impulse move out of the bottom and then just buy the shit out of diamonds. And if I get an interaction with the VPOC where I'm closing above it but starting below it, I can actually buy all of the green bars and all of the diamonds and all of the stars. Any of the aggression signals might work if I'm closing above the VPOC of the first wave. Not the wave at the bottom, but the wave off the low. Where is the wave to the low? Where's the VPOC on that? The wave to the low. Way at the high. Okay, cool. So this is a weird situation where I never know what to do, because technically the way that the setup I know of is you get above this, and now I can start taking green bars. Whereas here we have the wave off the low, producing opportunities down here, even though we haven't gotten to here. And then this is probably your first target. So what I'm wondering is, now here the star down, diamond up actually worked before we got here. It worked as a breakout, which I'm kind of surprised about. And pink diamond up by itself, well, with the green bar, and the green bar by itself, and the traps underneath the green bars seem to work as well. So maybe that's just luck, because that's kind of surprising. Okay, we consolidate. Pink diamonds to the upside. Continue to work. Now this one did not. Notice the diamonds the pink diamonds need to be at the bottom of the channel. At the bottom of the channel, at the bottom of the channel. At the top of the channel, they don't really go anywhere. There's nowhere to go. Bottom of the channel, they go. Okay. Diamonds. Bottom of the channel goes. Diamonds up. Diamond, bottom of the channel. Bottom of the channel, runs. Bottom of the channel, runs. Notice the down diamonds are definitely not working very well, because the buy program's on, right? Clearly buy program. Now, this pink diamond did produce a scalp, and this pink diamond did produce a scalp. So that's a sign that we might be getting consolidation. This one results in diamond down, star up. And then this one results in star down, green bar up. This is definitely consolidation here. Okay, so what needs to happen for this to change? We get underneath this. Yeah, so here they aggressively tried to save it here, and they got under it. And so now we should be looking for shorts, but you can't just do any short. You probably need it to interact with this. Yeah, down there or up there. So get volume below both of those. And now, so this one probably should have worked, but it's a short side. So you needed to try it twice, and you get this one, and that's perfect. Now the diamonds up should stop working, and the diamonds down should work. Diamond down. Diamond down. Huh. Star down. That's relatively simple. Diamond up doesn't work. Diamond down does. The trap off the diamond works well. Okay. Diamond down works. Diamond down works. It might not matter what's before the diamond. It might just be figure out the trend and take the diamonds. And then the traps off the diamonds. Because here's a diamond that works. And if it stopped out by 1 tick, I don't think it did, but if it would have, that orange bar works. Diamond up doesn't work. We're bearish. So the direction that the diamonds are moving is the direction the market's going. Diamond down, going lower. Diamond up, going higher. So this should now be consolidation. Yep. Diamond up, going higher. Dude, this is freaking simple. Is it really that easy? Have I been missing this whole time? So consolidation, now they should both work. Diamond up. There's diamond up. That works. If you're just scalping. Trap works to the downside, right? This trap works to the downside because this is consolidation. We have diamonds working in both directions, meaning trap should also work in both directions. So trap, trap, trap. All those work, and then this is trap up. Okay, we get an impulse move down. Impulse move down. Volume is way at the top. Okay. Diamond up doesn't work. Makes sense. Big impulse move down. I probably wouldn't have taken that, right? This trap doesn't work. It got underneath the big wave to the upside. I mean, now this one did too. This one put a big wave in, trapped underneath it, and it works. What happened here? This is the low. Is the volume at the low? The volume is at the high of the wave to the downside. They get underneath this and they rip higher. Okay, interesting. I'm kind of surprised that worked. Then the volume once again is up to the high, so you'd think it's bearish. So these probably won't work. This one works a little bit. Diamond down should work. Diamond down should work. Yep. Diamond down works. Now this diamond is not positioned very well. It's way at the bottom of the channel. That one gets stopped, and then you'd have to take the trap. But the trap's definitely working. Okay. Is a diamond... Did we get a diamond up anywhere? Here. Did the diamond up work? Yes. It's probably balanced. Traps in both directions should work. And diamonds in both directions should work. Now this diamond fails. Now it's probably bullish. Right? That's probably bullish because this diamond got... So diamond down, star up. If it works, it's probably not bearish anymore. By the looks of things. Oh, interesting. Diamond down gets stopped, and then diamond up gets stopped. So here you get into resistance, and you get into, where's that? Oh, where's this? This is the new low. Where's the volume here? At the top, yeah. So volume at the top, just like this, you can take either direction until you reach that point. And once you reach that point, then it's bearish. So down here, you can get long down here, and you can get short up here, but once you get up here, you don't want to be longing. So this long is bad, this short is good, and the trap is good. Okay, so it's long until you get to the volume point of control. Okay, okay. Bless you, cat. Let's see here. Now what happens? Lower? Okay. Consolidation. Diamond down doesn't work. Diamond up does work. We're probably going higher. Ooh, just a little bit. Diamond up stops. So star, diamond, and we go lower. So this whole move is lower. Okay, so we have to look at this from a bigger picture. Again, it's bearish from all the way up here. And it will continue to be bearish as long as they hold this. They put in a new low. It'll continue to be bearish as long as they hold this. There's a high volume area up here. But notice, I bet you they can't get a VPOC above that on a bullish bar. Bet you anything. Let's look. That would explain it. Okay. Pink doesn't count. Bearish bar. VPOC below the white. Star. Bearish. Okay. Pink doesn't count. Pink doesn't count. Bearish bar. Purple. Bullish bar, VPOC below. Anything to the downside is a sell. Look at that. Okay. That's actually really simple. That's way easier than I thought it was. So now it's bearish. And until we put in a new low, measure the new low. Where's the volume? On the bottom. Only be bearish if you can hold below that. Once you get VPOC above that on the bullish bars, it's balanced to bullish. Still no VPOC. Okay, so there's our first bullish diamond. If it's bullish, it'll go higher. Let's do one bar at a time here. Bullish, right? So it should go higher because we're over this VPOC. I don't know how long this is gonna work. Oh, okay, it does. Wow. Okay, so now this is an impulse move, right? So now it's bearish if we can get under this. So balanced to bullish unless we get under that. Okay, star down, that should be higher. No, so why did this not work? That should be bullish, right? Because you've got bullish impulse move. You're above the wave, the high volume node. Star down, diamond up. You'd think that's extension. They ran into this old resistance, I guess. Okay, so that probably will result in a impulse move to the downside, I guess. So obviously it's not going to be 100%, but we get a diamond up, that fails. Now I probably want diamond down because this is probably a new impulse wave. So let's see. Do I have to wait until it breaks the VPOC? Nope, diamond down worked. Just looking at diamonds. Interesting. So diamond up, those all work above the VPOC or interacting with the VPOC to the low. To the low. We go to the high, impulse move up. You'd think all of these are bullish. You'd think this one would be bullish. It fails. Now we should be thinking bearish. Diamond down, bearish. Okay. Diamond up. Now we've taken out the low. So now let's redraw. Where is the volume on this move? Pretty sure you just do the last wave. The volume's here. So that diamond is not good enough for me to buy because it has not yet overcome the VPOC. I'm pretty sure this probably fails. Let's see. Oops. Let's see if this fails. Yep. Oh. It tried to fail and then it gave us another diamond. Now this diamond is okay because it's the close is above the VPOC. So this diamond, no. This diamond, yes. Pretty sure. This one should work. Oh, where's the volume on this? I think this matters too. What if I do this whole down wave? Yeah, so we run into the... Okay, so it's not the little wave. It's the big wave. Higher time frame. VPOC is here. So I need it above that. So I can buy it into that, but I don't want to buy at it. That's the resistance. Okay, so so that means it's still bearish, right? No. Once you get over it. Okay, so it's just not bullish yet. So it's bullish up to that point, and then you need to see what they do. Thankfully, there's no diamond there, but if there's a diamond there, I might have thought that was a rejection, but apparently that's just consolidation. And then once you get over it, now aggressive signs to the top should give us higher. Okay, that's a diamond down. You wouldn't think that would do anything. Ah, that one does. Okay, what's this? Wave to the high. Oh, from the low. From the low. So here to here. Okay, so it should be, we can short it till we get there, then it will probably consolidate. So this is consolidation. I probably would not take that. And then this, same thing, right? No new low. Consolidation is what I'm guessing. Yeah. Okay, now we've interacted with this. So this one's probably okay to buy. That one's definitely okay to buy. Still hasn't stopped out underneath this, but notice we're consolidating still. So the rules are not quite that simple about when it breaks out, but it does eventually go higher. Okay, now we've trapped off of this. Right? Yep. So we don't take that one because there has not been an impulse move down. It should fail to go low. It fails for like a minute and then it rolls. How frustrating. Okay. And then it goes lower. All right. So this is just a complex consolidation. Interesting. Oh, did we make a new high? Oh, we made a new high. So whenever we make a new high, we have to redraw. Tricky. Redraw. Okay, VPOC's right there. Get underneath that and it's bearish. Happens right here. That's bearish. Nice. Okay, impulse move to the downside. Redraw. Need to get up above that or scalp and target it. Here you could scalp to target it, but if it turns around, you're done. There, done. Impulse move down. Consolidation. Okay, we get to the VPOC. Do we get turned around? We do. That's probably a sell. Yeah, it was a little, it didn't make it to the VPOC. See that? It's still above it. So maybe we wait for the trap, right? Does it not trap? It doesn't trap. So this just becomes an impulse move. Interestingly, the one diamond did work. Like in some ways it's easier than you'd think, but in other ways it's not. So here, it's a new low. A new low is put in here. The low before that was here. So the low before that, it used to be that the VPOC was there, and when we reject that, it's bearish. We put in a new low. You have a new VPOC, which is the pink line here. You can scalp back to it. That makes sense. Now, if they reject it, it's bearish. It didn't get under it. They put aggression in above it. They get under it with purple bars, come right back with green on the VPOC. That is bullish. Where your target, back up here, there, right there. That's your scalp to the downside. But this becomes not really an impulse move. It's a lot of small waves. Let's see if they continue it higher. Probably not. I don't remember. Wow, look at all these traps you'd have to live through. So you don't want to be buying here. So once you see the diamond to the downside working, they both work. Both diamonds to the downside work. This diamond got stopped out twice. The short side's hard. Okay, this diamond up, it's only a scalp to here. That's the diamond you want. That's gotta be it. Right, okay, another one. Diamond down, diamond up. What are they just consolidating again? Wow, it's really hard to tell when these consolidations are over. Look at that. Expanding range consolidation. That's really tough. So it's definitely not as simple as I thought it was. But sometimes it works beautifully. It looks like when you've got consolidation, see, this one's a sell, this one's a buy, this one is not a sell, this one's not a sell, this one you could buy, this one you could buy. You get over it, now you want to sell. So buy under it, don't sell off of it, sell when you get over it. Sell over it. That's what I said before too. I need the VPOC on the opposite side to drop, and then the close to fall through it. So this is a scalp. Do nothing here because it didn't get above it. We didn't test it yet. This one didn't get above it. Don't touch it. This one didn't get above it, but you can scalp back to it. Overshoots it. This one doesn't actually reach it, so you could probably skip that one. But it works. Okay, new low. Right, I think. New low. That's the little wave. That's the big wave. They're in the same spot. That's our scalp target, but it's bearish. So this you could scalp back to the volume point of control. You get a diamond down. You don't take it because it does not interact with either of these lines. And even though it's bearish here, we've got a bullish move working. That diamond almost does touch it. Very close. Does it? It does not trap. Okay, we get a diamond up with a green bar. You can probably bring that back to here. This diamond down does not interact with it. We don't touch it. Diamond up. What do we do with that? Probably nothing, because it's consolidation now. There's no impulse move to the upside, right? Oh, well, there's this. Where is the volume on this one? Okay. So interact with this and close higher, but you need a VPOC lower than it. VPOC's higher. I don't think it's going to work. Yeah, so the VPOC needs to be below it. And then the close above it. Okay. All right. Okay, new wave to the downside. VPOC's way at the bottom. That's the new VPOC. So bullish. So consolidate. That one, the VPOC's on the wrong side. Yes, and it fails. That's great. VPOC right on the money. And it goes higher. Doesn't quite reach it because it's a pink one. Goes lower. Pink one interacts with it right on the money. Go higher. Thank you. Does not reach it. Pretty sure that does not work. Wow. Okay, traps. Nothing, nothing, nothing. So it's true consolidation. Who's in control? Bears, right? We got volume above it. These little moves are working. But bears have the advantage. The bearish diamonds should work. Right there. That should be lower. Oh, it works. That's cool. Okay, now we got a trap. Diamond on the VPOC. That should work. Diamond to the downside. Works. Look at that. Yeah, I know. That's what I'm saying. Okay, new wave to the downside. Now, I don't know if I use this whole thing or what. All right, so this VPOC is way down here. So no scalping. Now I need bulls to interact with that level. So this is a buy. That, the VPOC's above it. Don't touch it. See, it's just by a tick, but it's too high. So wait for this for the trap, and the trap never develops. You get a new low. VPOC's way up here. It's bearish, but you want to take the bear from up here. It doesn't set up. It goes lower. Okay, now I don't know if it's this one or this one, but I think it might be the bigger one. All right, let's see. Does either of those create scalp targets or reversal points? Scalp targets for sure. So green bar at the bottom with VPOC at the highs or at the mids. Scalp back to it. Diamond to the downside. Is the VPOC above the wave VPOC? Yes. That should reverse lower. And it does. This one, VPOC is below and it closes higher. That should go higher. Wow. That's pretty consistent. So it doesn't actually matter what's behind it. So here's the, now it's this big one, and so it's all the way back here. Is it bullish? We've gotten over it. Pullback should be bought. Boom. We've gotten completely over it with white bars. All pullbacks can be bought. Now this is an impulse move. So let's erase all the lines. Now, is it the entire thing? Here's the small one. Interacts. That's good. Is it this? Interacts. Good to go. What about the whole thing? Way down here. Scalp till you get down there on a diamond. There's a diamond. Ooh, that doesn't work right away. So you can't just have any diamond. Oh, it's a trap. That trap should work. Wow! Wow, mind blown. Okay, there's definitely something to this. There's definitely something to this. It's just a matter of figuring out the rules. Wow. Okay, let's try this again. Doing it live is tricky because you don't really know which one to use, but it looks like it kind of doesn't matter. They're all working. So, big wave down. VPOC's at the high. Scalp back with green bars or pink, purple diamonds. Okay, no green bar. But, okay, white diamond. Where does that go? All the way back up. Okay. Now I would think that sellers are in control, so sells should work. Do we get any? There, right there. Diamond to the downside. Should work. Oh, they ran into a diamond to the upside trap. Does it get above it? Yep, goes right to the VPOC. So just because sellers are in control, if we haven't reached the VPOC yet of the wave down or the wave up, the impulse wave, until we reach that VPOC, you can't trust continuation moves. That's the crux of it. Now that we've reached it, now diamonds down should work if we reject underneath it at this level, which doesn't happen. It continues higher. So now if I wanted to find the up moves, what I'd need to do is measure the volume of the current move. So interact with that. Diamond's good. Interact with that. Diamond is good. Holy shit. So what I really need is for it to tell me where the VPOC is for each wave. That's what I need to know. Because if I measure it, oops. If I measure it and I find a VPOC and there's a diamond that interacts with it, I should be taking it. So that suggests we're going to pull back. Right there, I would take that. Oh, that'd be wrong. Hold on, I'm not doing the up wave. I forgot the up waves. So, up wave. Yeah, see, it's way down here. So we can't fight it until we, that's so weird. So here's, so what we really want is we want pullbacks into this. And until we've reached it, we really don't want to take diamonds. We haven't, so the diamonds don't work to the upside. The green bars do, but the diamonds don't. Once you, if you interact with a new volume profile, or the volume point of control, they can work. So we can skip that one because the VPOC's down here. So don't touch it, don't touch it. Okay, don't touch it unless it breaks that or interacts with it. Right there, diamond down interacts with the VPOC to the upside. That should be a short. That works. Does it trap? It does. Oh, diamond up, so wave down. Yep. Right there. Take that. So that'd give you plenty of time. Yep, that works. Wow. Okay. Up. Is the volume at the high? No. So you can use diamonds to scalp back to the pink line. Ooh, no. Not when it's this strong. Not when it's this strong. Okay, so they do it one more time. Oh, you know what? You might, yeah, it might be a bigger wave than this. When they get this extended, all right, so that one you do not take because it does not interact with the VPOC. There's the VPOC. So now we can buy a dip if it's a diamond. No diamond there, so don't touch that. Okay, off the high. Yeah, we would need it to get all the way down there to blue. And then up to the high. Yeah, right there. Okay, so can we get them? No diamond, no diamond, no diamond, no diamond, no diamond. Right there, diamond. Interacts with this high. Okay. Whoops. I hit too many lines. Oh, too many buttons. Okay, so that should go lower. Notice this diamond does not work because we've now gone into we're not scalping anymore. We're looking for continuation lower now. So this whole thing, the VPOC's up here, see? So we don't want to scalp to the upside. We want the downside diamond. So this diamond, this one just needed to get stopped first. So this one, no, unless you're scalping back to here. This one does not interact with it, so no. That one gets really freaking close. Yeah, doesn't quite do it. There. Does it trap? No. Not that yet. Look how close those are. It still doesn't reach it. So nothing to do all through RTH. It's just consolidation. Can they get a diamond that interacts with it? They got a star that interacts with it. So this would be scalp back to the pink line. They need a diamond off of here. They can't get it. That's going the wrong direction. Oh, they just let it go. So maybe this volume might have shifted. Oh, they put in a new high. I missed the new high. So you really have to be aware of where the high is. So wave to the high. Get under that. We know it's bearish. I already knew that. Wave off the high. Interact with that. There we go. And I can take diamonds too. Diamonds down that interact with that are good plays. So this is going the wrong direction. You can see we developed it. We knew it was bearish down here. You can scalp back to the pink, back to the white line. But really what we want is interactions either on this higher one with stars. So here, this star, or this star, or else diamonds that interact with the lower white line. Which just don't, they just don't happen. Okay, way to the low. All right, so you can technically scalp back up to that level. So the green with the diamond can be a scalp, but it's not very big extensions most likely. Oh, it comes all the way back up to here. No diamond down, nothing to do there. Diamond down interacts with this. Is this where the... Oh, it's so close. Really close. Yeah, but not good enough to reverse it. Look at that, it doesn't reach it. So it doesn't reverse. Instead, they develop volume above it, come back, give you a green bar to buy. Diamond. So did it interact down, up? Did it interact with this? That one looks good. Oh, wait, or is it this one? There's not a bullish, it's not bullish. I think you just skip it. Because it's just, yeah, it's just consolidation. It's not bullish. There's nothing, there's no bullish impulse move. So there's nothing to do there. You wanted a down, you wanted this. And that traps back in. Okay. Wave to the low. Okay, I can scalp long up to here. And then if they get over it and reverse with a diamond, it's a short. No diamond, no diamond. Just goes crazy. So this diamond I probably miss unless I wanted to scalp it, and then it just turns into 1,000-point move. Oh, this must be FOMC. Okay, I'm not so worried about this. Oh, here we go. It came back into it. Bounce with a diamond. It interacted with that level. VPOC below. Close above. See ya. Same thing here. VPOC above. Close below. I bet you anything that's where this is. Yep. And then this one. Way down here. Oh wait, it's this to the high. It's this one. So if it's following the rules, you can scalp back to here, but you really don't want to sell unless it can interact with that. So hold on. Too many lines. Hold on, let me start over. Okay. Wave to the high. Ah, give me that line. That's the VPOC of the wave to the high. So the rule is I can scalp back to the wave to the high. The volume or the trend is going up, so I want up diamonds interacting with that level. This one got lower than it, so that one just doesn't count. We don't want to touch these because they're coming right into it. If this was a diamond, it'd be a buy. I don't know about a green bar. I don't know about a green bar. See, it's still consolidating. See, these going in the opposite direction, I don't want to touch. The hard part is to recognize that this is bullish, not bearish, because the bearish impulse move, when it's so wide like this, it's hard to say. The bearish impulse move is right there. The white, that's the volume for the bearish impulse move. So technically, this would be a short, and this would be a short. And when those don't work, you know you're on the wrong side. So we're looking, and that's how you buy these. Is basically waiting to see which one's working. I mean, this is the Fed. It's not that important that it works there. Just kind of depends on whatever he says. Okay, so scalp back to that. Then look for diamonds. There we go. Diamonds off of it. That's it. That one fails. That one definitely fails. This is where you use your stop. Okay, let's try this one. Down to the low. Okay, all the way up here. Do we scalp back up there and do we put a diamond? Oh, we don't even get there. Okay, just more lows, more lows. Okay. All right. Do we scalp back up there? Yes. Do we get a diamond? Right there. Going the wrong direction. It's bearish. Don't want to take that. We do get this one. If we did this whole thing, I bet you the volume is there. Nope, it's all the way down here. Okay. So all the volume is down here, so we just missed that. It's off the low volume node. Yeah, so we don't take that. It's going the wrong direction. It does not come back up. Lows, 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 lows. Okay, there's a new low. New low. Again, I don't know how much of this to use, but I'm looking at it from here to here is about what I see. So let's see if that is an important level they scalp back to. They do. They reverse it with an orange bar. Can we get a diamond there? Right there. Pink diamond. Does it go down? Red diamond too. Does that one interact? No, it doesn't reach. So that seems to be a problem. If it develops too low, or if the VPOC's on the wrong side, if it's not above it and it's going down, you need the VPOC on one side and the close on the other, and that can create the trend reversal or the continuation, I should say. When it's not, it keeps hacking around in there. There, is that it? Oh, it's still not there. It's got to be above the blue. See, it's still not ready. It needs to have a VPOC above the blue and a close below it with a diamond. And see, it just won't set up. And see, that's way too high. And now we've got a wave up. So what about the wave up? I don't even know where to end this. Let's say here. Okay, way down here. So this would be our first one. And other than that, this is just chop, I guess. Okay, new high. Again, I'm not totally sure how far to draw this back, but something like that. Okay, they scalp back to it. Can we get a buy? Ooh, you'd think that one would be good. Traps back in and fails. Okay, do they come back to this one with a diamond? Doesn't, see, that doesn't reach it. And that doesn't, yeah, it doesn't do anything. Okay, new high. All the way down here. We should probably scalp back down there. Nope, new high. Okay, let's take this whole thing. Where's all the volume on this? Up there. Do we scalp back to it? No, we can't reach it. It's just super bullish. There's just nothing to do. Unless you want to fight it. This whole thing. Yeah, it's all the way down here. So let's just put it, so this is where all the volume is. If it's going to turn here, we could scalp it back to there if you think it might be balanced, but it just doesn't look balanced. So they're just not fighting it. Eventually they will. Oops. Okay, so there's the top. So let's see. Is the volume all the way down there? What about just like this? Ah, okay. All the way at the top. So this last little leg had the volume at the top. Can we get a diamond that has a VPOC above that but a close below it? That's an orange bar. Yeah, that'll have to do. That's pretty cool. It seems to work the same. It might not even matter what the algo is. It might just be a bar. See all this consolidation underneath it? It's going to resolve bearish because of this. Interesting. And so, so once we get this, I bet down diamonds will work, or traps will probably work. Now this one didn't work, but I would think maybe even the stars will work. Oh, we come back to the VPOC. Oh, we can't reach it though. Yeah, this is all Fed. I'm kind of not that interested in this. Let me get out of the Fed. It's just too much information, and I don't know how reliable it is. So let's get out. This is all he's talking. Okay, overnight. Let's do overnight. So move up. I'd say it went to here. All right, so we should probably scalp back to that. What if I do the actual high? From the low. Way up there. Okay, so let's mark these. So we have this one. And then we have this one. Okay. You'd know that once it hits the highs. So what I'd expect is at least pull back to there and then see if we can set up a diamond there. So that's just to get back to it. Orange bar, VPOC's on the wrong side. VPOC's on the wrong side, just didn't set up. VPOC's on the wrong side and it's going the wrong direction. Just no setup. Okay, does it come back because it didn't set up? Doesn't make it. Doesn't set up. Oh, and it comes back. There it is. VPOC above, diamond below. Does that evacuate? Yeah, it does. That's friggin' cool. Okay, well, that's neat. Okay, so there's a low. Let's try this one more time. This actually works. There's the low. Okay. We should see scalp back up to here. If it's bearish, we'll get a VPOC above, a close below with the diamond, and it'll continue. And they make a new low, nothing to do. Let's do this whole thing. Way at the bottom. They probably scalp back up to here because they didn't reach it. See, they can't get any diamonds associated with this. They're not done. There. Ooh, the VPOC's on the wrong side. It might not work. Yep. Look at that. It's got to be just right. See, that one didn't reach it. I don't think they're done yet. Nope. Not done. All just choppy mess. See, they're too high. I think it's going to have to do it one more time. Nope. That's it. Does it come back? No. Okay. So this one just didn't set up. Or I just measured it wrong. Wait, is this the low? Let me make sure I measured this right. What if I just do, that? Is that the level that got interactions? Because that wasn't there until this low with the white diamond. Does that get a VPOC above with a diamond close below? Right there. Holy shit. What? What? Okay, so there's the low. So where am I measuring this from? Here. So we had a big wave down with VPOC up there, a consolidation period where they tried to reach it and they couldn't. It's clearly bearish. Another move down. So this is like, it's two waves, but it's like, it's basically just a wave consolidation wave. But there's no retrace. See that? It doesn't come back and break any power bars or anything like that. So technically, you could use this entire thing. I mean, God, you could use the whole day, technically. But here, if you can get VPOC, see, this doesn't work. The VPOC's below. VPOC above, close below with a red or purple diamond right there. Evacuate the building. So it would be this, all the way down to the low, which is here. They come back to it. That does the same thing with the star. Evacuate the building. Okay. So this was a retrace, right? So it's just this. Okay. Scalp back to it. We need a, see, that didn't close below it. That won't count. Almost, but it didn't quite make it. Right there. Oh, VPOC's too low. Not gonna count. Yeah, that one. So they'll probably come back to it. There's the star. Oh, so now we have a new low. Fuck, I forgot. Okay, new low. I don't know whether or not I should use all of this or only part of it. If I use all of it, let's try that. Once they get to the low, I have the level. They come back up. They get star with a VPOC below and a close above, and they try to take it higher, and they do it again. They try to take it higher, and they do it again. Look at that. And they can't set up to the downside. Now it's bullish. To the high. VPOC's way at the top. Scalp back up to it. Can't reject. New high. Let's see. This is the last pullback. So let's go from there. VPOC way up there. By the time you get to the high, you do have a diamond at the top. It does not close below that line. You get beyond the line, and now do they set it up again? They don't. New high. It does not set up very often, but when it does, it seems to work. Oh, way at the top. This guy. See, the VPOC is below it. It's going to come back on him. So this one is too low. It's not done. Yep, not done with the area. It just rolls over. Oh, this is a new high, but it's not going to matter. So nothing. They retrace all the way back to this one. Now it's bearish, so you can't take the buys. Okay, new low. Where's the last retrace? Right here. You'd think it's this. Okay. Scalp back up to it. Set up for continuation lower. No diamond, no diamond. That diamond didn't close low enough. They made a new low. Erase lines. The new low is here. All the way down here. Volume at the lows. They establish volume above it. They give you a green bar. That's usually good to go. And they can't get back down there to continue it lower, so it's higher. New high. Do those two. If they can't get under that, it's not bearish. Okay, they try to get back to it. They can't. They print a diamond. It goes higher. Yeah. Okay, new high. Let's just do that one. Way up here. They scalp back to it. They get under it. See, this is too low. It does not have VPOC above it. It's got to come back up. Oh, and then it rolls up. So the orange bars look like they just need to get under it. Put volume below, give an orange bar, and it's over. So, but look, the diamonds don't work unless they've gotten the VPOC above it. That's useful in and of itself. Okay, so that's the high. I don't know how well this will work on the way down, but let's just try. If this was the low, here's the level you expect them to come back to. And now we're looking for VPOC above, close below on a down diamond. Oops, there we go. Well, they came back to this VPOC and bounced. Is that going to turn them around? So this VPOC is above, but the close is above, so they're probably not done here. Yep, they come back up, consolidation. Nothing. Oh, they put a new, shit, they put a new, I can't tell which one to use if it's this. See, if it's that, then sellers are in trouble. Because this had volume, VPOC below and close above, so that diamond works. Now you don't necessarily want to take this, but it's a star, so it's okay. And this is a star, so it's okay. Because now you've developed volume higher. What you really want is green bars there. It's probably not going to get out of here until it sets up the right way. Oh, this one. From back here, the bull one set up. The bear one set up right here. Damn. So you got to be really aware of almost two different opportunities. You've got continuation on a higher time frame, which you would draw on the higher time frame. So you'd find the last retracement and draw to the low. That is the level that you would need for continuation lower. And it's a diamond with the VPOC above and the close below, right there. That's the first and the only time it ever triggers. It often has a star behind it, but I don't think it even needs to. To get the reversal, we're going to do the wave to the low. And we need to develop volume above it. And then come back in with a green bar or a star. So this and this for scalps, and then a green bar for return for continuation. We don't get it. Instead, we get the bearish continuation, and it goes lower. God, that's freaking cool. I did not know that existed. I'm going to have to review this and try it with another day and make sure I'm doing it right, but holy cow, is that cool. So this is wave to the low. So the only way we can reverse this is if we develop volume above this, which hasn't happened yet. It's got to be a white, at least one white bar, and then come back in, bounce off of it on a green bar or a star, and we can go higher. To go lower, you'd have to get a diamond that has you'd consolidate for a while, get a diamond like this that has the VPOC above and the close below. That's probably continuation lower. Wow. And then if you want to do the bigger picture, I don't know how far back you can go. See, this is consolidation, so I don't think you count that. I think it's this. I think this is lower. I think we're going lower now. I wonder if this works on the big... Let's see if it works on the big time frame. That'd be freaking amazing. And then I got to take a break here. But this is neat. Okay, let me just back up on the higher time frame. When the direction is obvious, it should work. Okay, so wow, so many lines on here. Hard to see. Okay, so we have. Let's go back to Thursday. So we have a wave down, starting here. Let's say, where's the next diamond? Down, diamond down, diamond down, diamond down. They don't show up very often on this high time frame. Here's one. So that would be this. Nope, does not interact with that. What if I move it lower? Doesn't make it. What about? Okay. Does not interact. It just doesn't set up very often. Diamonds. Wrong direction, wrong direction. That's the scalp back to that point. That makes sense. So here, you'd be looking at the last time it pulled back, which is this, all the way to the new low. You'd expect them to come back to that level, test above it, reject it with a diamond, and then you'd go lower. Let's see if that happens. Oh, in this case, they just went higher. Okay, so they bounce it. So no. Okay, so then let's try it the other way. Price volume profile. Start at the low. We do that. This is the first wave up goes here. So we'd need a diamond with a VPOC below it and a close above it. It seems like it works with the stars too. Okay. Then they have a pullback. Then we have another one. Where's the high? Well, there's no diamond there, so high. Okay, so this is where all the volume is. That one doesn't reach it either. So sometimes the continuation doesn't even need to reach it, and it still bounces. Let's try this one. Pullback. If we only took it to like here, yeah, right there. So it does work, it just doesn't set up very often. And then what if I do this whole thing? Way at the top, get volume below, diamond down, So that probably means this down wave had a volume point of control at the lows. Oh, nope, back up there. What if I extend it? Let's see. If not that one. There we go. Right there. I don't know if you can see it. Red diamond. Evacuate the building. So it's not quite as good, but it still works. Okay, in consolidations is when we see them. So now let's take this whole thing to the low. Oh, come on. I'll just start over. Whole thing to the low. Here to here. All the way down there. Put a line on it. If it's bearish, we'll get a VPOC above it and a close below it with a diamond. It doesn't happen. It's bullish. Okay. And then no diamonds to work with here. They do it with the star again. It might work the same with the star. Wouldn't that be cool? So here it's, let's see, is that a pullback? I don't know if that counts as a pullback. Probably. So let's say this. Yep. Red diamond gets an extension. Can they get, and now if we extend this, to the low, it's all the way down there. See, the stars can get trapped. But look at, here's the diamond. Interacts with it, lower, eject, reject, go. No diamonds, no okay, here's one, but it's going in the wrong direction. It comes back to that other level, rejects. No diamonds, no diamonds. There's one. Way down. Ha! Again! Oh, it doesn't quite reach it. Hold on, what if we do... No. Doesn't quite reach it. Okay. Where is it? Where did it go? Oh, yeah, it's right there. Okay, so it doesn't quite, it's above it. It's above it. What if I do this one? Yeah. The wave to the high. This wave's volume is right there. They reject it exactly right. So it looks like it's not always in the same direction. It's sometimes in the opposite direction. But you basically just want those, you want these, if they're continuation, you want to see them happen where all the volume is. And reject suddenly. So it's going in the wrong direction. So here, what you would need to see to think it's bearish, you'd take this, you'd mark here, and you'd say, we want to see what happens if they get up above this, and then reject it with the diamond. It's right there. Oh, wow. Wow. Okay. Well, and look at that. It's a star as well. So, and now this one doesn't work with just the star. So it's not every star, but it looks like sometimes with the star it works too. But when the diamonds show up and they set up like this, it's like, I mean, it looks to me like it's like, from the last couple of days, it looks like it's 80% of the time it works. Interesting. Crazy. Okay, well, definitely worth keeping an eye on. I will keep looking at that, because that is, whoops, that is something. That's all I'm gonna say. That is something. I will take a look and see. Yeah, I mean, that's what it seems like, Ed. Like in the I mean, no, I've only done it the last couple of days, but it's like it's 90%. And the cool thing is it doesn't set up very often, so it's, you know, it's only, and it's a continuation signal, which I have very few of. Fascinating. So, because like I said, it all came from this bar. I was like, how could I have caught that? The way to catch it is to do this. Wow. What if I spread this out? What if I find the volume for like the entire move down and up? So from here to here. It's way up there. Yep. Yep. That is neat. That is cool. So it's, yeah, the VPOC of the actual like wave rotation. Buying exhaustion. You mean in that same way, Ed? Like in this at the same spot? Interesting. Okay. I'll watch for that too. But that's really neat. Okay, I've got to break my fast and take a break here. I've been staring at screens for like 7 hours, so just a little later on. Okay, later than like lower, like down here. You mean? Or you mean up here? What do you mean by later? You mean like you get it after this? Like this? Maybe? Like late, like after it's broken down? Yeah, 10, 6, 1, 1. 10, 6, 1, 1, 25. Hold on. 10, 6. What day was that from? 10, 6. Oh, 11, 6. Whoops. Okay, that makes more sense. 11. Oops. Let me go back to the end here. Chart. 11. 11, 6. 11, 6, 1, 1. 11, 6, 1. 11, 6, 11. Wow, way up here. That was a good. That was an early signal, I'd say. 11, 6. Are you sure? 11, 6. That's way long ago. When was that? 11, 6, 11. I'm not even sure what day that was. How long ago was this? 1430? 11, 6, 11? Hold on. Are you sure that that number's right? Am I reading it wrong? 11611? Where the hell did it go? Reset. 1430. You must be in like, I'm not sure. The number must be wrong. I've got 1430. I've got 10,8. Like 10,800. I have nowhere near 11,611. So I, maybe you mean 10,811? $10,805. Oh, wow. That's really good. So it showed up right here. Is that the first time that happened? In that entire consolidation? Is that the first time you had buy exhaustion? That's pretty cool. Wow. Neat. So that, because that would have come up before I got my speed trap signal. Because the speed trap signal technically doesn't trigger until down here. But you can, it happens fast though. Like they just gave it up. So, cool. I have that signal. I just don't have it on. But that's neat. Okay, I will take a look at that. All right, I'm starving. I haven't eaten anything since 8 o'clock yesterday. So it is time to eat. And I'm on Pacific time. So I will be back next week. I gotta go back to work tomorrow. But today was a okay day. Look at VPOX equal cell exhaustion at 1417 and 1409. Oh, so the opposite, it worked the other way too, you're saying, here. Nice. Nice. Cool. I have that. Are your settings, are you still using pretty much the same settings? For the buy exhaustion? Forget what it's called. High volume at price, I think. I have it in here somewhere. Absorb. Where is it? I thought I had it in here. Maybe I don't. Volume by price. It's none of those. Maybe I don't have it in here. I thought I did. By absorption. I thought it was like 10 something. 102 or something like that. I move all this stuff around and I get them lost. Is it this? No. I might have to add it back to this one. I might not have it here. Thought I did, but I don't see it. That's okay. I just don't remember what I called it. I changed the names of these things. And then I forget. Don't think it's that. No. That's okay. I have it, just not in this list. For some reason. I thought it was here. But I don't see it. That's okay. I'll figure it out. But yeah, if you're still using the same settings, I will take a look at that because that's pretty neat. Especially for these little like consolidation areas, if you can get in early. Yeah. High volume price. I have it. I just don't have it listed on there, I guess. On a different setting, I think I have it, but I don't have it on this, whatever it's called, analysis setting. I've got so many. So I will definitely take a look at that and see if that's something I want to add because that's useful if it's getting you in long here and short up here. That's pretty sweet. All right. Well, interesting stuff, guys. I hope we all learned something, and I will see you all next time. I gotta go eat something. I will see you soon. Thanks for saying hi, Ed.